Ayan. So now it's starting.
Doc Arnie.
Ayan, wait. Okay na?
Pa-share. Hindi. O, yan.
Ayan, okay.
Good evening, Dr. Bautista and classmates. We are the Pagnanganan siblings and we're going to report about financial statements. The topics that will be discussed are the following: Introduction to Philippine Financial Reporting Standards or PFRS and Philippine Accounting Standards or PAS. The objective of financial statements, accounting concepts used in financial statements, components of financial statements according to Philippine Accounting Standards. We are the following: statement of financial position or commonly known as balance sheet, income statement and or statement of comprehensive income, statement of changes in equity, statement of cash flows, and notes to financial statements. I will present these topics up to statement of comprehensive income. The learning objectives for the topics that I will discuss are the following: to know the updates on financial statements based on PAS and PFRS, to be familiar with the proper balance sheet presentation using the current and non-current classification of assets and liabilities, to be familiar with the formats, the income statement and or statement of comprehensive income. Before we proceed with the lecture, let us review some important words that may have meanings that are different from what we would think. This shows some of this confusing vocabulary. It is absolutely essential to use these words correctly when discussing financial statements. Sales and revenue are synonymous and mean the top line of the income statement, the money that comes in from the customers. Profits, earnings, and income are all synonymous and mean the bottom line, or what is left over from revenue or sales after all the costs and expenses spent in generating that revenue or sales are subtracted. Note that revenue and income have different meanings. Revenue or sales is the top line, and income is the bottom line of the income statement. Costs are money spent making a product. Examples are the materials and labor. Expenses are money spent to develop it, sell it, account for it, and manage this whole making and selling process. Both costs and expenses become expenditures when money is actually sent to vendors to pay for them. Orders are placed by customers and signify a request for the future delivery of products. Orders do not have an impact on any of the financial statements in any way until the products are actually shipped. At this point, these shipments become sales. Shipments and sales are synonymous. Solvency means having enough money in the bank to pay your bills. Profitability means that your sales are greater than your cost and expenses. You can be profitable and insolvent at the same time, meaning you are making money but still do not have enough cash to pay your bills. Now let's talk about Philippine Financial Reporting Standards and Philippine Accounting Standards. Accounting standards in the Philippines are adopted from the International Financial Reporting Standards issued by the International Accounting Standards Board, except on the aspect of revenue recognition under IFRS 15 for real estate companies that avail of the relief granted by the SEC. The IFRS is a set of accounting standards that are recognized by at least 120 countries, including the Philippines, and provides a guide on how particular types of transactions and other events should be reported in financial statements. The rationale for using the IFRS or PFRS is to ensure consistency in recording, recognizing and measuring financial transactions, which, if followed properly, will ensure stability and transparency throughout the financial reporting process of the company. These standards are not enforceable as compliance is voluntary. The PFRS are version of the IFRS with some minor modifications, and the PAS, which corresponds to the adopted IAS, are issued by the PFRS Council under the oversight of the Board of Accountancy. Hence, the PFRS and the PAS are our current set of generally accepted accounting principles or GAAP. GAAPs vary from country to country due to differences in the legal system, levels of inflation, culture, degrees of sophistication, and use of capital markets, and political and economic ties with other countries. Entities registered with the Securities and Exchange Commission are required to apply PFRS as their financial reporting framework. This table shows you the terms that were amended by IAS during 2007. Let's now discuss the main topic of our lecture, which is the financial statement. The objective of general purpose financial statements is to provide information about the financial position, financial performance, and cash flows of an entity that is useful to a wide range of users in making economic decisions. To meet that objective, financial statements provide information about an entity's assets, liabilities, equity, income and expenses, including gains and losses, contributions by and distributions to owners in their capacity as owners, and cash flows. That information, along with other information in the notes, assists users of financial statements in predicting the entity's future cash flows and, in particular, their timing and certainty. A complete set of financial statement includes a statement of financial position or balance sheet at the end of the period, a statement of profit or loss and other comprehensive income for the period, presented as a single statement or by presenting the profit or loss section in a separate statement of profit or loss, immediately followed by a statement presenting comprehensive income beginning with profit or loss, a statement of changes in equity for the period, a statement of cash flows for the period, and notes comprising a summary of significant accounting policies and other explanatory notes, comparative information prescribed by the standard. The standard requires compliance with a series of accounting concepts. Going concern is the presumption is that the entity will not cease trading in the foreseeable future. This is generally taken to mean within the next 12 months. Accrual basis of accounting. With the exception of the statement of cash flows, the information is prepared under the accruals concept. Income and expenditure are matched to the same accounting period. Accrual accounting is an accounting method where revenue or expenses are recorded when a transaction occurs rather than when payment is received or made. The method follows the matching principle, which says that revenues and expenses should be recognized in the same period. Cash accounting is the other accounting method which recognizes transactions only when payment is exchanged. Consistency of presentation. The presentation and classification of items in the financial statements should be retained from one period to the next unless a change is justified by a change in circumstances or the requirement of a new IFRS. Materiality and aggregation. Information is material if omitting, misstating, or obscuring it could reasonably be expected to influence decisions by the primary users of the financial statements. Each material class of similar item should be presented separately in the financial statements. This would apply to a grouping such as current assets. However, information should not be obscured by aggregating or by providing immaterial information Materiality considerations apply to the all parts of the financial statements, and even when a standard requires a specific disclosure, materiality considerations do apply. Offsetting. Assets and liabilities and income and expenditure may not be offset unless required or permitted by an IFRS. For example, it is not permitted to offset a bank overdraft with another bank account not in overdraft. Comparative information. There is a requirement to show the figures from the previous period for all the amounts shown in the financial statements. This is designed to help users make relevant comparisons. And the last concept is fair presentation and compliance with IFRS or PFRS. The financial statements must present fairly the financial position, financial performance, and cash flows of an entity. Fair presentation requires the faithful representation of the effects of transactions, other events, and conditions in accordance with the definitions and recognition criteria for assets, liabilities, income, and expenses set out in the framework. The application of IFRS or PFRS with additional disclosure when necessary is presumed to result in financial statements that achieve a fair presentation. Now let's take a look what the balance sheet is. This is just to remind you that the term was amended to Statement of Financial Position by IAS 1, and I'll use the terms interchangeably in my report. The balance sheet presents the basic equation of accounting in a slightly rearranged form. By definition, this equation must always be in balance, with assets equaling the sum of liabilities and worth. So if you add an asset to the left side of the equation, you must also increase the right side by adding a liability or increasing worth. Two entries are required to keep the equation in balance. The balance sheet presents the financial picture of the enterprise on one particular day, an instant in time, and the date it was written. The balance sheet presents what the business entity has today, which are the assets, how much the business entity owes today, which are the liabilities, and what the business entity is worth today, which is the equity. Let me just highlight the use of lines in financial statements, as this can be confusing if you do not know how accountants use them. Single line indicate that a calculation has been made on the numbers preceding in the column, while the double underline is saved for the last, which signifies the very last amount in the statement. The accounting elements of the statement of financial position or balance sheet are assets, liabilities, and equity. In the IAS 1, it specifies the minimum information which must be shown on the face of the statement of financial position. It requires to separate out non-current and current assets, non-current and current liabilities, and equity. Now let's define assets. The IFRS framework defines an asset as a resource controlled by the enterprise as a result of past events and from which future economic benefits are expected to flow to the enterprise. While in accounting, assets is defined as a resource or property having a monetary or economic value possessed by an individual or entity which is capable to generate some future economic benefit. Assets are generally brought in business to benefit from them and to increase the value of a business. In simple language, it means anything that a person owns. In the accounting context, an asset is a resource that can generate cash flows. Assets are generally classified in the following three ways depending upon nature and type. One way of classification of assets is based on their easy convertibility into cash. According to this classification, total assets are classified either into current assets or fixed assets. Current assets are easily convertible into cash, like stock, inventory, marketable securities, short-term investments, bank balances, bills receivable, prepaid expenses, etc. Current assets are generally of a shorter lifespan as compared to fixed assets, which last for a longer period. Current assets can also be termed liquid assets. Fixed assets are of a fixed nature in the context that they are not readily convertible into cash. They require elaborate procedure and time for their sale and converted into cash. Land, building, plant, equipment, furniture are some examples of fixed assets. Other names used for fixed assets are non-current assets, long-term assets, or hard assets. Generally, the value of fixed assets generally reduces over a period of time known as depreciation. Another classification of assets is based on their physical existence. According to this classification, an asset is either a tangible asset or an intangible asset. Tangible assets are those assets that we can touch, see, and feel. All fixed assets are tangible. Moreover, some current assets like inventory and cash fall under the category of tangible assets too. We cannot see, feel, or touch intangible assets physically. Some examples of intangible assets are goodwill, franchise agreements, patents, copyrights, brands, trademarks, etc. These are also classified under assets because the business owners reap monetary gains with the help of these intangible assets. A company's trademark, brand, and goodwill contribute to the marketing and sale of its products. Many buyers purchase goods only by seeing their trademark and brand in the market. According to the third way of classification, assets are either operating or non-operating. This classification is based on the usage of the asset for business operation. Assets that are predominantly used for day-to-day business are classified as operating assets, and other assets which are not used in operation are classified as non-operating. The meaning of total assets is truly reflected in the accounting equation as the sum total of liabilities and owner's equity, while net assets is a term used to state the difference between total assets and total liabilities. Consequently, it can be noted that the net assets and owner's equity are virtually the same. This table just shows you a clear picture of the types of assets. In IAS 1, an asset is classified as current when the asset is held primarily for the purpose of trading. The asset is expected to be realized, consumed, or sold within the entity's normal operating cycle. When the asset is expected to be realized within 12 months after the reporting period, cash and cash equivalent, any other assets would then be classified as non-current. Current asset groupings are listed in order of liquidity, with the most easy to convert into cash listed first. The money the company will use to pay its bills within the year when its current assets are converted into cash. Cash is the ultimate liquid asset. On-demand deposits in the bank, as well as the pesos and centavos in the petty cash drawer. When you write a check to pay a bill, you are taking money out of cash assets. When the enterprise ships a product to a customer on credit, the enterprise acquires a right to collect money from that customer at a specified time in the future. These collection rights are totaled and reported on the balance sheet as accounts receivable. Accounts receivable are owed to the enterprise from customers, also called accounts who were shipped goods but have not yet paid for them. Most business between companies is done on credit and are commonly given payment terms that allow 30 or 60 days to pay. Inventory is both finished products for ready sale to customers and also materials to be made into products. A manufacturer's inventory includes three groupings. Raw material inventory is unprocessed materials that will be used in manufacturing products. Work in process inventory is partially finished products in the process of being manufactured. And goods inventory is completed products ready for shipment to customers when they place orders. As finished goods inventory is sold, it becomes an accounts receivable and then cash when the customer pays. Prepaid expenses are bills the company has already paid but for services not yet received. Prepaid expenses are things like prepaid insurance premiums, prepayment of rent, deposits paid to the telephone company, salary advances, etc. Prepaid expenses are current assets not because they can be turned into cash, but because the enterprise will not have to use cash to pay them in the near future. They have been paid already. Current assets are said to be working assets because they are in a constant cycle of being converted into cash. The repeating current asset cycle of a business is shown here. Cash buys inventory. Inventory, when sold, becomes accounts receivable. Accounts receivable upon collection becomes cash. Then back to cash buys inventory. In addition to a company's current assets, there are two other major assets groups listed on the balance sheet: other assets and fixed assets. These so-called non-current assets are not converted into cash during the normal course of business. Other assets is a catch-all category that includes assets of the enterprise that cannot be properly classified into current asset or fixed asset categories. Fixed assets are productive assets not intended for sale. They will be used over and over again to manufacture the product, display it, warehouse it, transport it, and so forth. Fixed assets at cost are reported on the balance sheet at original purchase price. Fixed assets are also shown as net fixed assets, valued at original cost minus an allowance for depreciation. Depreciation is an accounting convention reporting on the income statement the decline in useful value of a fixed asset due to wear and tear from use and the passage of time. Depreciating an asset means spreading the cost to acquire the asset over the asset's whole useful life. Accumulated depreciation on the balance sheet is the sum of all the depreciation charges taken since the asset was first acquired. Depreciation charges taken in a period do lower profits for the period but do not lower cash. Cash was required to purchase the fixed asset originally. The net fixed assets of a company are the sum of its fixed assets purchase prices minus the depreciation charges taken on the income statement over the years. The so-called book value of an asset, its value as reported on the books of the company, is the asset's purchase price minus its accumulated depreciation. Note that depreciation does not necessarily relate to an actual decrease in value. In fact, some assets appreciate in value over time. However, such appreciated assets are by convention still reported on the balance sheet at their lower book value. Now let's talk about the next accounting element, which is liabilities. A liability is something that the business has to pay either in cash or kind to its stakeholders and third parties. It tells about financial strength. It is a basis for comparison, used to calculate financial ratios, and serves as yardstick for company to evaluate its financials. The formula used to calculate liabilities is equal to assets minus owner's equity. Liabilities in the balance sheet are broadly categorized into two headings: short-term or current liabilities and long-term liabilities. In IAS 1, current liabilities are those expected to be settled within the entity's normal operating cycle, held for purpose of trading, due to be settled within 12 months, for which the entity does not have the right at the end of the reporting period to defer settlement beyond 12 months, and other liabilities that are not described are classified as non-current. Liabilities are categorized and grouped for presentation on the balance sheet by 1. To whom the debt is owed, and 2. Whether the debt is payable within the year or is a long-term obligation. Accounts payable are bills, generally to other companies for materials and equipment bought on credit that the corporation must pay soon. When it receives materials, the corporation can either pay for them immediately with cash or wait and let what is owed become an account payable. Business to business transactions are most often done on credit. Common trade payment terms are usually 30 or 60 days with a discount for early payment, such as 2% off if paid within 10 days or the total due in 30 days. Accrued expenses are monetary obligations similar to accounts payable. The business uses one or the other classification depending on to whom the debt is owed. Accounts payable is used for debts to regular suppliers of merchandise or services bought on credit. Examples of accrued expenses are salaries earned by employees but not yet paid to them, lawyers' bills not yet paid, interest due but not yet paid on bank debt, and so forth. Any notes payable and the current portion of long-term debt are both components of current liabilities and are listed on the balance sheet under current portion of debt. If the enterprise owes money to a bank and the terms of the loan say it must be repaid in less than 12 months, then the debt is called a note payable and is a current liability. A loan with an overall term of more than 12 months from the date of the balance sheet is called a long-term debt. A mortgage on a building is a common example. Every time the company sells something and makes a profit on the sale, a percentage of the profit will be owed to the government as income taxes. Income taxes payable are income taxes that the company owes the government but that the company has not yet paid. Every 3 months or so, the company will send the government a check for the income taxes owed. For the time between when the profit was made and the time when the taxes are actually paid, the company will show the amount to be paid as income taxes payable on the balance sheet. There is not a separate line for total liabilities in most balance sheet formats. A company's total liabilities are just the sum of its current liabilities and its long-term debt. This is just to show you the summarized table of assets versus liability. The company's working capital is the amount of money left over after you subtract current liabilities from current assets. So the good stuff minus the less good stuff is equal the great stuff, which is the working capital. Working capital is the amount of money the enterprise has to work with in the short term. Working capital feeds the operations of the enterprise. Working capital is also called the net current assets or simply funds. With lots of working capital, it will be easy to pay your current financial obligations, which are your bills that come due in the next 12 months. Now let's talk about equity. Theoretically, the equity section of the balance sheet represents the owner's portion of the business after all the liabilities have been paid off. Shareholders' equity has two components: capital stock, which is defined as the original amount of money the owners contributed as their investment in the stock of the company, and two, retained earnings, which are all the earnings of the company that have been retained that is not paid out as dividends to owners. Both net worth and book value mean the same thing as shareholders' equity. The original money to start in any add-on money invested in the business is represented by shares of capital stock held by owners of the enterprise. So-called common stock is the regular denomination of ownership for all corporations. All companies issue common stock, but they may issue other kinds of stock too. Companies often issue preferred stock that have certain contractual rights or preferences over the common stock. These rights may include a specified dividend and or a preference over common stock to receive company assets if the company is liquidated. All of the company's profits that have not been returned to the shareholders as dividends are called retained earnings. Retained earnings is equal to the sum of all profits minus the sum of all dividends. Retained earnings can be viewed as a pool of money from which future dividends will be paid. In fact, Dividends cannot be paid to shareholders unless sufficient retained earnings are on the balance sheet to cover the total amount of the dividend checks. Shareholders' equity is just the sum of the investment made in the stock of the company plus any profits minus any dividends that have been paid to shareholders. In summary, the balance sheet presents the financial picture of the enterprise on one particular day in an instant in time. So what we have today is equal to what we owe today plus what we are worth today. By definition, this equation must always be in balance with assets equaling the sum of liabilities and equity. Next topic is the income statement. According to IAS 1, income statement is amended to statement of comprehensive income, and the income statement is retained in case of two statement approaches used. Statement of profit or loss and other comprehensive income is a term also used. The balance sheet shows the financial position of a company at a particular point in time, but the profit and loss statement shows the real strength and earning power of a company over a period of time. Also, it takes into account the accounting principles of revenue recognition, matching, and accrual basis, which makes it more important and meaningful than the cash flow statement. This statement summarizes all the incomes and expenditures over the desired time period. It gives the result as net loss or net profit. It can be prepared monthly, quarterly, as well as annually. What is the importance of this statement? A profit and loss statement is extremely important for a business for making decisions. This statement helps in arriving at figures required for filing statutory tax returns. And this statement helps the company to borrow funds as it helps lender to gauge earning potential of the borrower. These are the definitions of the terms from IAS 1. Profit or loss is defined as the total of income less expenses, excluding the components of other comprehensive income. Other comprehensive income is defined as comprising items of income and expense that are not recognized in profit or loss as required or permitted by other IFRS. And total comprehensive income is defined as the change in equity during a period resulting from transactions and other events, other than those changes resulting from transactions with owners in their capacity as owners. Comprehensive income for the period is equal to profit or loss plus other comprehensive income. When it comes to preparing an income statement, the businesses have two options. The two options are a single-step income statement or a multi-step income statement. And they are free to opt for any of the statements because the end result of the two options remain the same. The difference is only in the structure of the two methods. In a single-step income statement, this method uses the following equation. Net income or loss is equal to revenues plus gains minus the expenses plus losses. The biggest advantage of this method is that it is easy to understand and use and is pretty straightforward. In a multi-step income statement, a specific segregation or split is made between the revenue and expenses on the basis of whether they belong to the operational and non-operational stream. Under this method, there are three steps to calculate the net income or loss for a company. Like the single step, this method also shows and uses all the information, but it uses more than one equation to come up with a profit or loss for the company. Since it differentiates between the operational and non-operational revenues and expenses, it classifies the expenses that could be directly linked or relatable to the business operation from those that do not relate directly. Basically, it uses three equations to come up with a net profit or loss for a business. One, gross profit is equal net sales minus the cost of goods sold. Number two, operating income is equal to gross profit minus the operating expenses. And three, net income is equal to operating income plus non-operating items. This is to show you the difference of the two statements wherein the multi-step income statement shows the operating and non-operating income. The income statement gives one important perspective on the health of a business, its profitability. We should take note that the income statement does not tell the whole picture about the company's financial health because it says nothing about when the company receives cash or how much cash it has on hand. The income statement reports on making and selling activities of a business over a period of time. What's sold in the period minus what it costs to make minus the selling and general expenses for the period equals the income for the period. Sales are recorded on the income statement when the company actually ships products to customers. Customers now have an obligation to pay for the product and the company has the right to collect. Net sales means the total amount the company will ultimately collect from a sale. That is, list price less any discounts offered to the customer to induce purchase. When a product is shipped and a sale is booked, the company records the total cost of manufacturing the product as cost of goods sold on the income statement. When the company made the product, it took all the product's costs and added them to the value of inventory. The costs to manufacture products are accumulated in inventory until the products are sold. Then these costs are expensed through the income statement as cost of goods sold. Gross margin is the amount left over from sales after product manufacturing costs are subtracted. Gross margin is sometimes called gross profit for the company's manufacturing margin. Operating expenses are those expenditures that the company makes to generate income. Common groupings of operating expense are 1. Sales and marketing expense, 2. Research and development expenses, and 3. General and administrative expenses. Operating expenses are also called SG&A expenses, meaning sales, general, and administrative expenses. Income from operations. A manufacturing company's operations are all its actions taken in making and selling products, resulting in both expenses and costs. The term income from operations refers to what is left over after expenses and costs are subtracted from sales. Companies can also generate income and have expenses from financial non-operating activities. For example, a manufacturing company selling a piece of real estate for a profit. Paying interest on a loan is a so-called non-operating expense. Likewise, receiving interest on cash balances in the company's bank account is non-operating income. Because it is from non-operating sources, interest income is reported on the income statement just below the income from operations line. Likewise, taxes. A company's operations can be producing income, but the company as a whole can still show an overall loss. This sad state of affairs comes about when non-operating expenses, such as very high interest expenses, exceed the total operating income. Income is the difference between two large numbers, sales and costs plus expenses. More costs plus expenses than sales, and the company will show a loss. Less costs plus expenses than sales, and the company will show a profit. Remember, income is not cash. In fact, a very profitable company with lots of net income can also be insolvent, that is, with no cash left to pay its bills. Often, rapidly growing companies are short of cash, even though they are highly profitable. They simply cannot supply out of earnings the capital required for such rapid growth. Income or profits versus sales or revenue. I'll repeat what I've said at the start of the lecture. The words income and revenue are often confused. They mean very different things. Profit and income do mean the same thing. Sales and revenue do mean the same thing. Income, also called profits, is at the bottom of the income statement. Sales, also called revenue, is at the top of the income statement. Income is often referred to as the bottom line because it is the last line of the income statement, and sales are often referred to as the top line because it is at the top of the income statement. The income statement summarizes and displays the financial impact of movement of goods to customers or sales minus the efforts to make and sell those goods or costs and expenses equals any value created in the process, which is the income. All business activities that generate income or a result in a loss for a company, that is, all transactions that change the value of shareholders' equity, are recorded on the income statement. Other comprehensive income, commonly known as OCI, refers to those items of income or expenses that are not recognized in the profit or loss of an entity as a result of requirements mentioned in accounting standards. Based on the treatment specified in the accounting standards, these items may or may not be reclassified into the profit or loss of an entity upon fulfillment of certain conditions. Income statement and statement of comprehensive income are differentiated because IAS 1 gives two options to present the items of incomes and expenses recognized during the period. IAS 1, paragraph 81, allows that all the items of income and expenses recognized in the period, either in a single statement, which is called the statement of comprehensive income, or in two separate statements as follows. The income statement, which was discussed earlier, and the statement of other comprehensive income. This statement contains such line items which are not recognized in profit or loss, and if disclosed under income statement, then it might mislead users of financial statements as they may consider them as regular line items. The components of other comprehensive income include changes in revaluation surplus, see IAS 16 property, plant, and equipment, and IAS 38 intangible assets, actuarial gains and losses on defined benefit plans, gains and losses arising from translating the financial statements of a foreign operation, gains and losses from investments in equity instruments measured at fair value through other comprehensive income, and the effective portion of gains and losses on hedging instruments in a cash flow hedge, see IAS 39. There are two categories of other comprehensive income. Other comprehensive income, that is to reclassify to the profit or loss. This is when an item is reclassified to the profit or loss in accordance with an accounting standard. The amount lying in OCI is transferred to the profit or loss, and the amount accumulated as OCI in the equity portion in the balance sheet moves to retained earnings. Further, when an entity makes reclassifications, it is required to make a disclosure regarding such reclassification, such as the nature, amount, and the reason for the reclassification. The other category is the other comprehensive income that is not to be reclassified to the profit or loss. This is just to show you a statement of profit or loss, including the other comprehensive income. Here is an example of comprehensive statement attached to the bottom of our income statement. As you can see, the net income is carried down and adjusted for the events that haven't occurred yet. This gives investors and creditors a good idea of what the company's assets and net assets are truly worth. Keep in mind that we are not only adjusting the assets of the company available for sale securities, we are also adjusting the net assets of the company, stockholders' equity. Creditors can see how much investors have in the company, and investors can see the potential of the company assets and future earnings and profits if these assets were actually sold and the gains were realized. Classification of items in OCI is important as it helps in the identification of overall profitability and earnings of the company. Identification of items as the OCI in the statement of profit and loss account gives a clear idea about the profits that are accrued to an organization subject to realization. This leads to transparency in financial reporting. These are the references I used for this presentation. Thank you very much for your kind attention.
Okay. Ganda. Very well said and very well discussed, madam. Okay, so we have the continuation.
Yes
Yes po,
po.
Doc.
Okay.
Notes to financial statements provide a narrative description or disaggregation of items presented in the financial statements and information about items that do not qualify for recognition. The notes contain information in addition to that presented in the statement of financial position, income statement, statement of comprehensive income, statement of changes in equity, and statement of cash flows. Notes to financial statements shall present information about the basis of preparation of the financial statements and the specific accounting policies used. Disclose the information required by the Philippine Financial Reporting Standard that is not presented in the financial statement. Provides additional information which is not presented in the financial statement but is relevant to its understanding. The order of presenting notes are as follows: statement of compliance with the PFRS, summary of significant accounting policies used, supporting information or computation for line items presented in the financial statement, other disclosures such as contingent liabilities, unrecognized contractual commitments, and non-financial disclosures. Equity is the net amount of funds invested in a business by its owner, plus any retained earnings. The statement of changes in equity is a reconciliation of the beginning and ending balances in a company's equity during a reporting period. It is a common part of the annual financial statements, but not so much in the monthly financial statements. The statement starts with a beginning equity balance and then adds or subtracts such items as profits and dividends payments to arrive at the ending balance. The general calculation structure of the statement is as follows. The content of the statement of changes in equity are net profit or loss, dividend payments, proceeds from the sale of stock, treasury stock purchases, gain and losses of recognized directly in equity, effects of changes due to errors in prior periods, and effects of changes in fair value for certain assets. Cash flow forms one of the most important parts of business operations and accounts for the total amount of money being transferred into and out of business, and it affects the company's liquidity. It allows business owners and operators check where the money is coming from and going to. It helps them take steps to generate and maintain sufficient cash necessary for operational efficiency and other necessary needs. And it helps in making key and efficient financing decisions. A cash flow statement is a financial statement that provides collective data regarding all cash inflows a company receives from its ongoing operations and external investment sources, and all cash outflows that pay for business activities and investments during a given period. The cash flow statement is the most insightful of all the financial statements because it follows the cash made by the business in three main ways: through operations, investment, and financing. The sum of these three segments is called the net cash flow. The three financial statements are the balance sheet, income statement, and the cash flow statement. The balance sheet provides an overview of the company's assets, liabilities, and owner's equity as of specific date. The income statement provides an overview of the company's revenues and expenses during a period. The cash flow statement bridges the gap between the income statement and the balance sheet by showing how much cash is generated or spent on operating, investing, and financing activities for a specific period. It makes transactions that go through a company more understandable. Cash flows from operations is the first section of the cash flow statement, and it covers cash flows from operating activities and includes transactions from all operational business activities. It indicates the amount of money a company brings in from its ongoing regular business activities. It does not include long-term capital expenditures or investment revenue and expenses, and focuses only on the core business and is also known as operating cash flow or net cash from operating activities. Operating activities include any spending or sources of cash that's involved in a company's day-to-day business activities. Any cash spent or generated from company's products or services is listed in this section, including cash received from sale of goods and services, interest payments, salary and wages paid, payments to suppliers for inventory or goods needed for operation, and income tax payments. The cash flow from operating activities depict the cash-generating abilities of a company's core business activities. Cash availability allows a business the option to expand, build, and launch new products, buy back shares to affirm their strong financial position, pay out dividends to reward and bolster shareholder confidence, or reduce debt to save on interest payments. Positive and increasing cash flow from operating activities indicates that the core business activities of the company are successful. It provides as an additional measure or indicator of profitability potential of a company, in addition to the traditional ones like net income or earning before interest, taxes, depreciation, and amortization. Investors prefer companies generate cash flow from business operations, not through investing and financing activities. Cash flow from investing is the second section of the cash flow statement and is the result of the investment gains and losses. This section also includes cash spent on property, plant, and equipment, and this section is where analysts look to find changes in capital expenditures. When capital expenditure increases, it generally means that there is reduction in cash flow. This may indicate that the company is making investment into its future operations. Companies with high capex tend to be those that are growing. While positive cash flows within this section can be considered good, investors would prefer companies that generate cash flow from business operations and not through investing in financing activities. Companies can generate cash flow within this section by selling equipment or property. Cash flow from investing activities reports how much cash has been generated or spent from various investment-related activities in a specific period. Investing activities includes purchases of physical assets, investments in securities, or the sale of security or assets. Negative cash flow is often indicative of a company's poor performance. However, Negative cash flow from investing activities might be due to significant amounts of cash being invested in long-term health of the company, such as research and development. Cash flows from investing activities provides an account of cash used in the purchase of non-current assets or long-term assets that will deliver value in the future. Investing activity is an important aspect of growth and capital. When investors and analysts want to know how much company spends on property, plants, equipments, they can look for sources and uses of funds in the investing section of the cash flow statement. Capital expenditure, also found in this section, is a popular measure of capital investment used in the valuation of stocks. An increase in capital expenditure means the company is investing in future operations. However, capital expenditures are a reduction in cash flow. Typically, companies with significant amount of capital expenditure are in state of growth. Below are a few examples of cash flows from investing activities along with whether the items generate negative or positive cash flow. Cash flow from financing is the last section of cash flow statement. This section provides an overview of cash used in business financing. It measures cash flow between company and its owners and its creditors, and its source is normally from debt or equity. Analysts used cash flows from financing sections to determine how much money the company has paid out via dividends or share buybacks. Cash flow from financing activities provides investors with insight into a company's financial strength and how well a company's capital structure is managed. When cash flow from financing is positive, it means there is more money coming into the company. When the number is negative, it may mean the company is paying off debt or is making dividend payments and or stock buyback. This is the formula which investors and analysts use to determine if a business is on sound financial footing. First, add cash inflows from the issuing of debt or equity. Then add all cash outflows from stock repurchases, dividend payments, and repayment of debt. Then subtract these cash outflows from the inflows to arrive at the cash flow from financing activities for the period. Cash flow from finance indicates the means through which a company raises cash to maintain or grow its operations. A company's source of capital can be from either debt or equity. When a company takes on debt, it typically does so by issuing bonds or taking a loan from the bank. Both must make interest payments to its bondholders and creditors to compensate them for loaning their money. Through the equity route, it issues stocks to investors who purchase the stocks for a share in the company. Some companies make dividend payments to shareholders, which represent a cost of equity for the firm. These are the transactions that cause positive cash outflow from financing activities. A positive number for cash flow from financing activities means more money is flowing into the company than flowing out, which increases the company's assets. Transactions that cause negative cash outflow from financing activities, stock repurchases, dividends, paying down debt. A company that frequently turns new debt or equity for cash might show positive cash outflow from financial activities. However, it might be a sign that the company is not generating enough earnings. If a company is repurchasing stock and issuing dividends while the company's earnings are underperforming, it may be a warning sign that the management might be attempting to sustain its stock price, keeping investors happy, but their actions may not be in the long-term best interest of the company.
Thank you po.
Thank you.
Okay. So, with the module, no? Module 2 about financial statement, husband and wife po ba sila? Husband and wife?
Magkapatid po.
Magkapatid.
Magkapatid. I thought you are husband and wife. Sorry po. The
Okay
usual.
lang, hello.
Siya po yung mas matanda.
Husband and wife eh. Kaya pasabi ko, husband and wife kaya ito. Okay, so brother and sister. Ay, mga bata pa kayo.
Thank you po.
Oo, kasi sa idea, parang mga bata pa kayo. Well, anyway, with regards to that module, no, module 2, financial statements, what are these that made up the financial statement? Now, what is this financial statement? As we consider, no, financial statement is the one we use as a device with regards to getting information, no, relative to our decision making, financial decision making. Kaya yung mga piniresent nyo, if let's say the viewers or the listeners look at it, no, talagang sabi nga hinimay-himay ni Ate at ni Kuya yung isa-isa, no, by way of discussing each and every detail of the accounts. Maganda naman po yun kasi there are those naman na yes, they know financial statement, they know the accounts, but yet with regards to each and every, tawag natin ay accounts, no? Yung term na, let's say, current assets, what are in the current assets, no? Yung mga cash na yan, yung accounts receivable, marketable securities, inventories, they know it, but the point is, ano yun? Kanina in-explain ni ate. It's about these current assets. No, these are on the part of balance sheet. Under the assets, these are those that being used, no, in the operation for a specific period, which is short term, yung 1 year, no, 1 year below. Dapat itong apat na account na to o 5 account, no, pati po yung prepaid expenses, dapat po yan ay ma-account within a year. Dahil if not, no, we cannot consider it current dahil nga aalisin na natin siya, dadalhin na natin siya if ever, no, na hindi siya magme-make up ng 1 year do sa other assets. Kasi yung other assets, as I called it, tapunan yon ng mga walang account na let's say, hindi makategorize ko nasaan. So sabi ko nga doon sa mga, nung ako internal auditor, at medyo, pagka hindi nyo makita ang account o hindi nyo alam kung sa isasama ang account, tagay nyo sa other assets. Bahala na yung accountant na mag-adjust. Anyway, pag nag-audit naman, they are being paid, no, in relevance to paano nila aayusin yung financial statement. Kaya kung hindi makita, kung sa record, sige lang, lagay nyo sa other asset. Kung yan ay utang, lagay nyo sa other liabilities, no problem. Anyway, the external auditor will be the one to adjust that and make the possibility kung saan yan ilalagay. Rather than ilagay mo sa bulsa mo, mas masama yun. Kaya ilagay mo na lang dyan, let's say it's a question mark, what account? Lagay mo sa other assets. Walang problema. Rather than hindi yan makita. Okay? So maganda yung pagkaka-discuss, no, in relevance to these parts, no, or yung sections na tinatawag natin sa financial statements. Na financial statement is only part of financial reports. Kasi yung financial reports naman po sa kabuuan, no, meron siya doon na about the notes to financial statement, no? Ano-ano po ba yung mga nag-adjust doon na, let's say, especially kung ang adjustment that are not conformed, no? May mga sinusunod tayo kanina diniscuss ni Ma'am Hester, no? Yung with regards to, let's say, yung about the simplicity, no, yung I forgot it. GAAP, no? Following the rules on GAAP, tsaka yung iba pa, no, na may mga, let's say, rules that governs how to do the financial statement. So, kung let's say meron tayong mga binago, no, accordingly na, let's say we change the method ng inventory, no, from first in first out to last in first out. Naturally biglang mag-a-adjust yun dun sa amount. Either magiging malaki ang loss noon or magiging malaki ang pagbabago in the sense na bababa yun or tataas yun, no? At if ever I am the one who looks at the financial statement, magugulat ako. No, lalo kung may comparative, no? The usual pag ginagawa financial statement, may comparative 'yan eh. Previous year at saka yung year na ginawa mo ngayon. So let's say 2020 and 2021. Pinagko-compare. Kaya kung let's say you're looking at it and then you compare, bakit parang biglang nagbago ang laki? So titignan ngayon yung notes. And notes will tell us kung ano meron at ano binago natin sa financial statements. Okay? Now, the income statement, of course, no, it says us kung ano meron, no, regarding the affairs of the business. How the business, no, inclined of growth, paano ba siya nagbenta or paano ba niya na-acquire yung kanyang mga kinita. So, actually kanina, I was listening about this income statement, no? Dati kasi income statement was called profit and loss nung ako'y nag-aaral. Ang tawag talaga diyan profit and loss. Okay? And then, napalitan niya ng expense and revenue. Okay, yung mga ganon. That later on, no, napalitan niya income statement. After this income statement, napalitan na naman, no? What I know is a statement of financial performance. No, ang tawag sa kanya. Statement of financial performance. Ang balance sheet, it's capital and something nung time na yun. Tapos, pero ang ginabutan ko, balance sheet na. And then for now, it was changed into yung ginagamit na ngayon, statement of financial position or financial condition. Yun naman ang tawag sa kanya. Sa ngayon, no? Pero syempre, ako naman, I look at the idea na, sanay ako the BS, sanay ako IS. Pero I know naman what changed, no? Or what is the term change that was used to change balance sheet, no? To yun nga, condition and position. Si income statement naman is about performance. Okay? Now, during those times that I was, no, with the learning process of this BA accountancy po kasi ako eh. So, we're using that at that time we only have two financial statement portion. It's income and balance sheet. But since there was this let's say scandal, no, that had happened in this year 2000, 2002, 2004, no, the scandal that make use of changing itong financial statement natin into at least 5 forms, no, or 5 sectors, 5 sectors: the income statement, the balance sheet, the cash flow, no, yung cash flow, statement of retained earnings, and statement of owner's equity. Ito pong tatlong to, actually dagdag na lang to. No? That it was made as an additional para po itong income at saka balance sheet na portion natin ay para bang nire-reconcile. Bakit? For those things that had happened will not be happening again. Dahil nga po may mababait kasi, sorry for the word, no, may mababait na nag-isip. And this was the scandal that longs for Lehman Brothers and Enron, no, to mark as the scandal of the century. Imagine niyo, pinalabas nila na they are accountants eh. Pinalabas nila yung mga company na hawak nila, they are earning when in fact they are not. And what they did, they do something, no, na hindi na nga pinalo yung ating GAAP, GAAS, IFRA ba yun, something, yung mga ano kasi acronym. Pero they did not follow that, no, eventually parang kumbaga ano ba yan, kala nila hindi mabubuko, di ba may kasabihan tayo, all those that we did, no, will somehow be ano yan yung magugulat na tayo, paano yan, walang lihim na hindi, ayun, tama, walang usok pag walang apoy. Yung point na walang lihim na hindi nabubunyag, yun, no. So at that time, yun na, sumasabog na yung skandalo that senator from US, no, he dig deeper doon sa nag-i-issue And for that, no, he made use of changing yung idea nga ng financial statement, no? Inano niya, ni-reformat na niya ito at iniba niya yung sequence ng when it comes to reporting the financial reports. Kasi financial statement is part only of financial reports. Marami pa pong kasama kasi yun. Yun na nga, yung financial statement na yan, yung notes to financial statement, tapos yung mga general information sheet, no? For the operation of the business. What else? Yung management responsibility in terms of vouching, yung ginawa ng independent auditors. So these are the documents that you have to attach, no, para po dito sa Pinas, para po pag re-registration actually, pag renew natin yung registration with SEC. Yes, Statement of Management Responsibility. Kasama po yun, no, na binoboach ng management na yung ginawa ng external auditors with regards doon sa ginawa niyang financial statement conforms doon sa gusto nila at wala silang ginawa na masama doon sa dokumento. May ano po yun, may let's say if they found out may may kaso ka because of that Sarbanes-Oxley Law of 2002. Sinunod din po natin yun kasi tayo naman talaga yung ating part ng accounting, we follow the AICPA, no? American Institute of Certified Public Accountants. Na tayo, meron naman dito local. It's the Philippine Institute of Certified Public Accountants. Ano po tayo dyan? Naka-correlate tayo. Yes, speak pa. Naka-correlate tayo po sa sa AIC, no? Yung American Institute of Certified Public Accountants. That if ever dito sa atin, no, kaya po talaga napakahirap. Sabi ko nga, I don't know naman kung tama ba o hindi, no? Kasi I used to be an accountant, no? Pero hindi nga lang ako CPA kasi I did not take the exam for CPA, no? After my graduation, I finished my accounting kasi 8 years. No? Dahil ako po ay working. So to that point, sana kukuha ko CPA. Actually, naka-review na ako. But the point is, I was not given the chance kasi nung medyo nag-full blast na yung review, nag-file ako ng vacation dahil nga magko-concentrate ako doon sa review. And it was accepted and later it was reverted, no? Na kasi mag-audit ang CPA firm, SG, ano yan? Sino nga yung sisip, yung sikat na, SGB, yes, thank you po, SGB. No, they are to make the audit. Siyempre, internal auditor ako at that time. I used to be there. Kaya hindi ako naka-attend ng aking mga review. Pero gano'n pa man, no, when we have this mock exam, I got 73. So sabi ko, pwede. 2 points na lang hahabulin ko kahit doon lang sa Pasangawa. So I continue with the review and then sabi ko nga, nagbayad ako PRC. So I got already where I will be conducting the exam, TIP. Ano pagdating ko doon para akong nabuhusan ng tubig, no? Aakyat ako sa taas, hindi ako nakaakyat. Sabi ko, yung parang kinabog, dinaga, sabi natin. Huwag na lang. Ayun. Upon backing off, wala na, hindi ko na siya natuloy. That after I attended the post-evaluation review, dahil pag-uusapan doon, nangyari doon sa exam that it turns out, no, they will be to retake the exam. Nagkaroon daw ng dayaan, massive na dayaan. No, 3 yun Davao, Manila, Cebu. Maniwala kayo lahat merong massive leakage. Maniwala ako kung Manila. Kasi nung 1988 wala pa naman cellphone. Talagang parang mangyayari, no? That they look into possibility, mukhang yung exam yata na ibigay ng madali. And it turns out parang ang dating maraming papasa. Hindi pwede yun Sa CPA po, hindi pwede yun. Dapat hindi siya tataas na 20% ang papasa. Parang rule ng CPA yun. Wala dapat. Kaya sabi ko, okay lang. Siguro para hindi ako talaga doon. No? Kaya, ano na lang, I go with, yun. After being an internal auditor, naging accountant ako for a while. And then, yun, no? I became the VP Finance after. Naging chief accountant ako, though I'm not a CPA. And then after, I was given the chance to become Vice President Finance. So, yun na. Doon nagsimula ako na talaga na focus na ako ng finance. Okay? So, going back, no, sabi ko nga, marami tayong document na isasubmit. And in that way, yung ating financial statement is only part of that, yung financial report. And then the votes, no? Or let's say yung sinasabi natin, the audit report na tinatawag given by these independent auditors, no? Yung I have examined the financial statement of Chuchuchu company in the year Chuchuchu, and we instigate that the financial statement follows the Chuchuchu and whatever, no? So they will be saying anong klaseng report yung nakita nila. Is it a qualified report? Is it apat kasi yun no? Merong qualified, unqualified, yes, audit opinion. Is it adverse? Is it, ano isa? Apat no? Pagka yung dalawa, unqualified at saka qualified, okay yun. Pero pag napunta na doon sa medyo adverse at saka yung isa, nako, patay tayo niyan, no? Ibig sabihin, masama yung nangyari sa kumpanya. Hindi nila masabi kung ano meron ng mga auditors. Okay? So, accordingly, going back with the sections, no, of this financial statement, disclaimer. Okay, si Sir Jester, accounting yata ito, Sir Jester. Ginaguide niya ako dun sa mga idea ng financial statement. MBA, also more or less Sir Jester. Now I know you are probably an accounting wizard. Nakikita ko Okay? So, to think of these consequences. Let's say, you are the accountant, you did something wrong, no? May mga ginagawa kasi class, sorry ito kumbaga sinasabi ko na ng diretso in a way na para maging familiar kayo, no? Ang financial statement po kasi kumbaga sa babae, no? Yan ay napapaganda. Kung talagang gagawin, Kaya lang kung ikaw ay sabi nga you believe na hindi mo to dapat gawin, don't do it. Pero if you believe na kailangan gawin, no, one of the aspect is, let's say, if you want to entice investors in your business, somehow you will do it. Kaya lang, mag-ingat ka nga. Bakit? Dahil baka mamaya, pagdating sa dulo, alam naman natin yun, di ba? Dadating yung punto na magkakabukuhan. Okay? So may ginagawa po dyan, no? Pinagagantayan. Either it's about window dressing and overlapping. Dalawa, Sir Jester yun. Window dressing, pinagaganda niya, no? At overlapping, pinagaganda in the sense na you get something either from or to, no? Yung nakaraan or yung coming. So, ang gagawin mo, sabihin na natin, sa madaling salita, mandadaya ka. No? Kung loss ko ngayon, pag gagawin mo, siya ay kumita. Either you will be getting it from prior years or doon sa dadating na year. So, may gano'n, no, na implications. Kaya sabi ko nga, maaari baka talagang hindi ako linya sa accounting, no? Kasi hindi ko sinasabi matino ako, pero more or less, meron akong mga somewhat, no, mga behavior na pag alam kong mali, magkapatayan na tayo, mali ka pa rin. Ganun ako. Okay? Kaya siguro para hindi ako doon. But look at the idea po, no? When senior high came and we were asked, no? Meron ba may balak dyan magturo sa senior high? Mga college kami, tuturo kami. So, if you go down with the senior high, definitely in 5 years' time, dapat mayroon kang professional teacher sa license. So out of that, no, we were given the chance kasi sabi nila faculty development. Sabi ko, oh, sinasabi niyo yan. Noong time na yun, no, I was part of that, kumbaga sa eskwela, nakikipag ako na, oh, ano ba yung pwede niyo may ano dyan? Gusto niyo matulungan. Dahil sabi nila, mawawalan daw po ng trabaho na yung mga college kasi dahil yung iba na subject ng college, it will be given to senior high noong time na yun, no? So, for that, para bang ang dating sige, bigyan na, sabi ko kasi, you want us to go to senior high if ever, dahil nga mawawala ng ituturo, no? Babawasan yung college. What will you do to these people? Hindi nga sila, hindi nga sila lisensyado. So, ano daw ang may sasuggest ko? One thing about it, give us the idea to be an educator para makakuha kami exam. Yun. Nag-offer ang school, faculty development, 18 units. So, kumuha kami ng 18 units. And luckily, no, ako lang yung matapang ang muka, matapang ang loob. Nag-take ako exam without review. Talaga sa bahay lang, no? That's September, August, September. Bibigay yung exam ng September. So, review ako. Dito lang sa bahay. Talagang sabi ko, kailangan to by, devil's advocate. Kailangan maipasa ko to. And luckily, no, we got I took the exam and luckily, November, lumabas yung resulta. No, I passed the board exam. Dito ako. Ibig sabihin pala talaga teacher ako. Kaya ako napunta dito. So, teacher ako talaga. Because this is my first love, actually, no? Ito ang first love ko. With courses, I got secretarial and then accounting, no? And then I go with masterals and doctorals. And then parang ang dating, nag-take ako ng law, pero hindi ko siya natapos kasi I went back. Kumbaga, bumalik ako. Kumuha nga ako ng edu. So out of that, yun, medyo umayos naman. So for now, I am a certified daw, professional licensed teacher. Meron ako, no, 2015, nung, pati yung anong babae na pumasa kami. Kaya out of 27 na binigyan nung, ako lang yung matapang na nag-take ng exam. Kaya sabi nga sa school, nung time na yun, sabi ng din namin, talaga to si Presi, lakas na loob. Sir, pag sa buhay na to, pag di mo nilakasan ng loob mo, kawawa ka. Pero ganun din, hindi naman ako nabigyan ng chance to teach in the high school, senior high, college pa rin. Okay? And ito, naging college, naging doctorate. So, going back, again, with the topic, no, all these things, no, yung mga ni-report ni Sir at saka ni Ma'am, this is about giving us, no, yung tonto ako yung pagkaka-discuss ni Ma'am ni Ma'am Hester doon sa punto nung part ng balance sheet kasi karamihan talaga 'yon. Lagi kino-question 'yan sa dami ng account na pumapasok diyan. By the way, no, balance sheet kasi class it's from the start of the business you prepare it till the time up to this time, let's say 50, 60, 90 years na nag-ooperate ang business. It's it's the financial, it's the balance sheet, no? From then to till now. Bakit? Kasi ito ay yung tawag natin, no, yung nag-a-update, kumbaga ina-update siya. Unlike if it is if you go with the title, no, let's say it's balance sheet, let's say ABC Corporation balance sheet as of, which means from the time it was open till this time. Ito ang laman yan, ito ang capitalization yan. Unlike if it is in the income statement, dalawa piniprepare natin Sir Lester, no? Dalawa ang adjuster. Dalawa piniprepare natin sa income statement, income statement, the per month, no? Yung for the, let's say for the month ended, halimbawa, January. Tapos gagawa ko ulit February, March, April. Pero may isa tayong ginagawa, yung tinatawag natin cumulative. No? For the 5-month ended. Ibig sabihin, from January to May. From the 9-month ended ending. For the 9-month ending September. So meaning to say from January to September. And let's say for the month, no? For the 12 month ending December. Ibig sabihin isang taon 'yun. Why? Kasi po income statement, itong income statement na to, ito po ay every year pinapalitan natin. Because all of these accounts there, no, sinasara natin 'yan through account summary, no, or let's say we close it in the expense and revenue summary, tapos dinadala natin, no, or let's say sinasama natin sa retained earnings. Kaya napansin niyo, no, yung discussion ni Sir do sa retained earnings. Ni Sir ba? Ay bagay, sa cash flow din nakikita yun eh. Let's say, ni Ma'am Hester yata, yung with regards to may beginning, may ending. No? Bakit may beginning, may ending? Kasi po, yung naabutan na doon, tapos ano ba yung month ngayon na dumagdag, ilalagay na dito as an added. No? And then kung ano na yung mga ibabawas natin. So let's say no, ano bang activity natin sa income statement? Let's say, no, we will be paying, let's say, dividend, no, or let's say we will be securing something relative to our let's say capital, yung capex na tinatawag, no, capex, capital expenditure. So may mga mababago doon sa retained earnings. So idadagdag natin 'yon. Parang yung discussion ni Sir naman with regards to cash flow, no? Yung discussion kasi nga sabi ko yung reconciliation 'yan eh. So doon yung ano yung money in, ano yung money out. As to what? Operation, as to financing, as to investing, no? Yung tatlong aspect ng activity. So more or less all these things, no, it says something. Kaya very important po talaga yung financial statement na yan. Much more on the next, no, topic natin, module, when it comes to analysis. Kasi dito po, mas marami tayo na mapag-aaralan in regards with doon sa financial statement. Kasi sometimes, we look at financial statement as in, ito ba yung makakabawi pa? Let's say, no, medyo dwindling siya at makakabawi pa kayo ito. So, you will do the effort of, let's say, putting up computations relative to paano ba gusto mo makita kung mag-grow, gusto mo makita kung liquid o whatever. So, meron tayong mga ratio na gagamitin to work it out, no? Computing, ano ba yung hinahanap natin, no? Pwede pa bang umutang to? Liquid pa ba to? Magpa-profit pa kaya? Just the same, no? Makakabawi pa kaya? Yung mga ganon. So, literal po, the use of financial statement will be, no, the highlight doon sa pag-solve natin ng mga sabi nga natin, formulas, no, for the analysis. Okay po? May question po ba kayo about the module 2 discuss? Napakaganda nga po no? Madam, by the way, mga colleagues, let's say mga ano ba, I cannot make it student, pangit eh. Colleagues, no? Anyway, all of us now are professionals. By the way, no, yun pala, we have to submit that report, okay? As as an evidence na mayroon tayong diniscuss along with, no, doon nga sa sinasabi nating case and assessment, no? So dapat tatlo yan na makikita natin na pinasa nyo for the completion of the the requirement. Okay? Kaya pakilang po if ever at may time na kayo, i-drop nyo na. Yes, Ma'am Hester.
The question po, saan po namin ipopost? Sa classroom po or i-share na lang po namin yung folder sa inyo ng mga presentation?
Actually, nakikita ko may problema sa folder. Sometimes you cannot open it. Humihingi ng ano yung tawag dyan? Permission. Nangyari sa akin yun, noong nakaraan. Yung bang Diyos ko, dahil nagmamadali ka, hindi mabuksan-buksan. Oy, bigyan nyo.
Editor mode.
Permission, di tayo mabuksan. So, siguro I prefer, mas maganda, post na lang. Yung talagang post. Mas madali siya kasi kuhain. Rather than naka-drive. Ang hirap. Actually, yun yung isang nangyari sa amin na late kami ng submission, no? We have to submit yung nakaraan, August 30, no? Tapos deadline namin first week of September. Na-delay ako kasi merong ilan na doctors na hindi nabuksan ba or something na it asked permission. And nag-aasa ko ng permission, hindi naman nakikita pala. Sabi ko, patay tayo niyan. Sabi ko doon sa ano, yung parang pinaka-head, no? Or yung nag-coordinate. Sabi ko, Madam, baka naman mabibigyan mo ako dito ng help. Kasi I need to comply with the requirements. Hindi ko mabuksan yung ilan doon sa doctor's file. Sige ma'am, sabihan ko. Kaya for me, maybe maganda na kanya-kanya pa in a way para madaling pick upin. Maganda nga sana yung naka-form, no? Kasi yun sila noon, sama-sama. Let's say, lahat ng case analysis, lahat ng assessment, lahat ng case. Kaya lang, minsan kakaproblema, ayaw siya mabukso. Kaya pagdating ng oras, ay ako'y mangulit. Kaya post na lang natin. Anyway, mas madaling tignan pagka ganun. Okay po?
Yes po, Doc. Okay po.
Opo. Thank you po, Ma'am
Thank you po.
Hester. Thank you, sir. So, if ever, continue pa ba tayo o next meeting na? Kasi kung next meeting tayo, 4 na session tayo, dapat magdalawa-dalawa tayo eh. Continue. O, sige. To si Sir Lester, tingin ko, ano to eh. Sir Lester, ano ang iyong course? Kasi naka-MBA ka eh. Accounting.
Hello, Doc.
Hello po, accounting kayo?
CPA po, Doc.
Oh, sabi ko na eh. So, more or less, no? Kaya pala. So, ako pala dapat ang hihingi sa iyo ng idea about this, no? Kasi ikaw CPA eh.
Hindi po, Doc, kasi hindi naman kasi lahat applicable sa current na work ko eh. Although may idea ako, pero yun kailangan pa rin i-refresh.
Okay. Hindi, kanina, yung ano nga ako, no? Sabi ko, we are doing the beautification, no? Pinagaganda natin yung financial statement. There are those instances. Sumagot siya doon sa chat eh. It's about the window dressing. Totoo yun eh, window dressing and overlapping. Pag April, masaya yan. Yes, sir. Actually, the reason why, medyo sabi ko nga, exposed ako sa accounting, though I'm not a CPA. Kasi meron po ako na family friend. Actually, boss ko yun dati, na naging family friend namin, that he make you, CPA siya eh. So, he make use of accepting yung mga trabaho ng nagpa-file sa BIR. And that was the reason where, sir, I got my first 100,000 pesos. Unang-unang hawak ko ng 100,000. Bakit? As a BIR ako, when somebody, a Japanese, who used to have an illegal trading, import-export trading, kinana siya ng BIR. That it so happened, I was there, I was filing for one of our clients na tinuro ako nung, syempre nakikilala, tinuro ako nung parang division head doon dahil nga namumroblema itong Japanese. So what we did, no, kinausap ako na yun, sabi ko, sige, I will talk to my partner, no, partner in crime, sabi nga. So tinawagan ko, sabi ko, ito, may program nga. O sige, sabihin mo, punta ng, magkita tayo sa Greenbelt kasi San Miguel kami eh, andun sa Makati. So, punta ng Greenbelt, doon tayo magtuos, kumbaga. So, sabi ko, if I may, my partner tells me to ask you if you can go to ganyan, no? Japanese eh, ang hirap pagsalita. Of course, kailangan, no? So, pumayag naman, no? Sinakay na niya ako doon sa sasakyan niya, dahil talagang ang laki ng babayaran niya eh, 1.4 million. Kinana siya ng BIR eh. So, nung nagkausap na sila, no, yung aking parang pinaka-boss ang nag-uusap, ganyan. So, magkano babayaran? 1.4. O, nag-ano sila. Sige, I can say, I can promise you that more or less I can make it lower. Sabi niya ganyan, no? Pero, yun nga, no? Magkano siningil? 200,000. Oh, Jester, 200,000. Imagine mo, it's 1980s to 200,000. Lakong pero noon, di ba? Tapos, additional 50,000, alam niyo naman, maglalagay. Hindi na mawala yan. So, binigyan kami. 250,000. Naayos yung dokumento. Alam niyo kung magkano lang babayaran niya? 600,000 out of 1,400,000. So, tuwan-tuwa siya. O, magkano lang nagastos niya. So, that's the reason why yung aking parang naging partner, no? Instead of, ang trabaho namin kasi parang sinusweldohan niya ako. Eto hindi. Ang ginawa niya, 50-50 kami. Ang katwiran niya, ikaw nakahanap niyan. Eh. Kaya I got my first 100,000. Imagine, class, tuwa ako talaga. Syempre, no, ang hirap pa ni Aling Presi noong time na yun. Gaaral ako. Yung mga ganong probetsyo. Kaya talagang wow, no? Tapos the 50,000, no, I expense out only around noong time na yun, no, mga nasa 20,000. Bigay-bigay, no? Pa isa-isang libo, yung division head, nabigyan namin ng 3,000, yung mga ganon. So, hindi namin naubos yung 50,000. Sa tuwa nung Japanese, binigay pa sa amin yung 30,000 na difference. Hindi na kinuha. Up to nung time na yun, no, a little, sa ngayon, wala na ako idea. Kasi yung aking parang pinaka-boss, wala na din, no, patay na. So, he used to, na he had to get another person, no? Hindi ako CPA, sayang. Pero kung CPA ako, talaga, hindi ko bibitawan yun, Then, naging naging, kumbaga naging consultant kami. That monthly we receive consultant fee or professional fee. Kaya di man ako naging CPA, no? Literal, naging expose ako sa CPA jobs. Yung pa nga, no, sa opisina. Being an auditor, you are the eyes and ears, what are these things happening sa negosyo, no? Tapos, naging accountant ako. To the point na I became a chief accountant and later on, yun, naging finance. Talaga nakita na ako sa finance. Okay po. So, sorry po, that's just a mere giving you idea who Presi is, no? To this point. Kaya yung ngayon nga na teaching, at least when it comes to experience, I can give some of these experiences. Okay? So, sino po ba ang susunod natin when it comes to analysis?
Doc, kami po ni Sir Jester.
Kayong dalawa. So,
Opo.
if ever, as we go, we continue?
Yes po, Doc.
Sige po. Go. Anyway, one hour pa naman. Alas 8 pa lang. Hindi, actually, gusto ko nga po talaga 2 reports para kuha natin talaga yung force for meetings.
Doc Oliver, ikaw yung magpe-present no una.
Yes. Try ko lang yan. Maglolo ko kasi bigla.
Sige po.
Sir Jester, but may file ka ba? Hindi ko ma-share. Sorry.
I-try ko po sir kung kasi video kasi siya baka sa internet hindi masyadong. Sige, try ko po i-share.
Ito, try ko. Kita po?
Yes po.
Ayan.
Okay. Ay, sige.
Ayan, kita.
Okay na po, Doc.
Financial statement analysis. So for the outline, first, I'm going to give a brief definition of financial statement analysis, how to conduct financial statement analysis, and lastly, the limitations of financial statement analysis. So financial statement analysis is the process an individual goes through to analyze a company's various financial documents in order to make an informed decision about the business. They are written records that convey financial activities and conditions of a business or entity and consist of 4 major components. They are the balance sheet, income statement, statement of changes in equity, statement of cash flow. For the balance sheet, a balance sheet is designed to communicate the book value of a company. It is a simple accounting of all the company's assets, liabilities, and shareholders' equity, and offers analysts a quick snapshot of how a company is performing and expects to perform. So most balance sheets follow this basic formula: assets is equals to liabilities plus shareholders' equity. So what are assets? An asset is anything the company owns which has a quantifiable value. This may include physical properties like cars, vehicles, lands, and unsold inventory, as well as non-physical properties like the patents and trademarks. Liabilities refer to money the company owes a debtor. This may include outstanding payroll expenses, debt payments, rent, and utility payments, money owed to suppliers, taxes, bond payable, and more. Shareholders' equity is a term that generally refers to the net worth of a company. It reflects the amount of money that would be left if all assets were sold and all liabilities paid. Um, This money belongs to the shareholders, whether they are a private owner or public investor. Now, next to your balance sheet is your income statement. An income statement is a report that a company generates in order to communicate how much money it has earned over a period of time. They often found as quarterly or sometimes annual reports. The summary of how the business generates its revenues and incurs its expenses through both the operating and non-operating activities. The income statement includes first the operating expenses, which detail every expense the company encountered during the reporting period. Um, Second, depreciation, which quantifies the extent to which a company's assets, for example, equipment and vehicles, have lost over the value over time. And third, net income, which abstracts the company's expenses from its gross revenue in order to determine its total level of profits or loss. And fourth, earnings per share, which divides net income with the total number of outstanding shares. Third, statement of cash flows. The cash flow statement is a report that details how a company receives and spends its cash. They're also called the cash inflows and outflows. So, the statement of cash flows usually merges the balance sheet and the income statement. Under the statement of cash flows, it has activities like your operating activities, cash flows directly related to sale and production of the firm's products and services, investing activities, cash flows associated with purchase and sale of both fixed assets and business interests, financing activities, cash flows that result from debt, and equity financing transactions includes incurrence and repayment of debt, cash flow inflow from the sale and of stock, and cash outflows to pay cash dividends of or repurchase stock. Next is your statement of changes in equity. Changes in stockholders' equity during the accounting period is reported in this statement. The statement of shareholders' equity is a financial statement that details changes in the equity held by the shareholders, whether those shareholders be public or private investors. And according to some of my readings, no, internet readings, there's a fifth um, component of your financial statements. Financial, uh, while it is not a financial document in itself, no, the management and discussion and analysis (MD&A) typically provide additional context about why the company performed the way it did during the reporting period, which can be incredibly tool to investors, analysts, and creditors. So according to SEC, US SEC, no, the purpose of MD&A is to provide investors with information that the company's management believes to be necessary to an understanding of its financial condition, changes in financial condition, and results of operation. It is intended to help investors to see the companies through the eyes of the management. So MD&A. Now let's proceed to how to conduct financial statement analysis. No? Um, Basically, is divided into horizontal and vertical analysis and the use of ratios. So, vertical analysis is the process of reading down a single column in a financial statement. Vertical analysis focuses on the relationships among the financial statement items at a given point in time. So, common size financial statement is a vertical analysis in which each financial statement item is expressed as percentage. No? So, horizontal analysis, on the other hand, refers to the process of reading current financial data in comparison to previous reporting periods. It is also called trend analysis. Reading a financial statement in this way allows an individual to see how different financial metrics have changed over time. For example, between year one and year two, or quarter one or quarter two. So horizontal analysis shows the changes between years or months in financial data in both the currency, in our case the peso, and percent and in percentage form. So horizontal analysis, single point in time. Horizontal analysis, different points in time. So next is your ratio analysis. Ratio analysis is the process of analyzing the information in a financial report as it relates to another piece of information in the same report. So, as a general rule, according to SEC, desirable ratios vary by industry, but uh, as there is many different kinds of ratio, no, they're broken down into four broad categories. No, the profitability ratio. And these ratios offer insight into how profitable a company is. Liquidity ratio, how liquid the company is. Leverage, offer insight into how much a company is dependent on debt. And activity ratio, offer insight into how well a company is utilizing its resources. So again, profitability ratios. These ratios offer insight into how profitable a company. No? Some important profitability ratio includes gross profit ratio, return on equity, break-even point, return on equity, return on net assets. No? So profitability ratio indicate how efficiently a company generates profit and value for shareholders. So liquidity ratios offer insight into how liquid a company is, which is important in measuring a company's ability to stay in business. Some important liquidity ratios include cash coverage ratio, current ratio, and liquidity index. Liquidity ratios measures a company's ability to pay debt obligations and its margin of safety through the calculation of values. Leverage ratios offer insight into how much a company is dependent on debt to maintain its operations. Some important leverage ratios include debt to equity ratio, debt service coverage ratio, and fixed charge coverage. So a leverage ratio, no, is any one of several financial measurements that assesses the ability of a company to meet its financial obligations. A leverage ratio may also be used to measure a company's mix of operating expenses to get an idea of how changes in output will affect operating income. Activity ratio. Activity ratios offer insight into how well a company is utilizing resources. Some important activity ratios include accounts payable turnover rate, accounts receivable turnover rate, inventory turnover rate, and working capital turnover rate. An activity ratio is a type of financial metric that indicates how efficiently a company is leveraging the assets on its balance sheet to generate revenues and cash. No? The activity ratio is a measure how quickly work moves or how quickly the income moves in a company. Now, for the limitations of financial statement analysis. So first, it is not a substitute of judgment. An analysis of financial statement cannot take place of sound judgment. So basically, the judgment or the conclusion is dependent on the experience, on the knowledge of the management and the of the actual analyst. No? So basically, kung gaano kadami na or gaano kaalam ng isang tao sa ano, syempre yun pa rin magbabase ang judgment regarding sa kita or sa pagkalugit sa kumpanya. So, second limitation is based on past data. Not only past data is accounting information is included in the financial statements which are analyzed. So basically, ang pag-analyze kasi natin ng financial data is from the base year, usually number of months or years mula dun sa present data. No? So sabi ko nga kanina, maraming factors ang pwedeng maka-affect sa isang cash flow into sa cash inflow ng isang kumpanya. So mahihirapan tayong gamitin siya as a predictive or a planning component. Next is your problem in comparability. No? There are a number of different methods that are acceptable, no, regarding sa depreciation and inventory costing. No? Different methods could result in different net income calculations. So comparability between companies that use different methods would be challenged and would require the user of the information to identify the costing methods used in each company's annual report. So, sa pagkaintindi ko, no, halimbawa dito, yung manukan ni Pedro ay mahirap ikumpara sa manukan ni Juan, lalo na kung magkaiba sila ng breed ng manok na ginagamit. For example, ang gamit ng isa ay Rhode Island, yung isa naman ay native. Siyempre, mas marami at mas malalaki ang itlog ng ginagamit ng Rhode Island versus sa native na manok. So, unless pareha sila ng ginagamit, doon natin sila pwedeng i-compare yung data talaga. So, next is your reliability of figures. Sometimes the contents of the financial statements are manipulated by window dressing. So, minsan ina-adjust ng mga nag-i-input or ng mga managers ng data para syempre hindi naman sila magmukhang mahina sa kanilang boss. Or minsan pwede rin mali-mali din yung tiga-input ng data, ng tiga-values. So, basically, pag nagkaroon ng mali ng input at some point sa buong financial data or sa some statement, mali na din ang mako-compute na values ng net income, ng assets, and probable liabilities ng isang kumpanya. So another limitation is the items purchased by the company are recorded at cost. No? So, bumababa ang value ng mga gamit minsan. Uh, Especially during sa inflation, no? Minsan ang nabibili ng 1,000 after 1 year, uh, 500 na lang. So, example din ito, yung halimbawa bumili ng company car, ang value minsan ng kotse is halimbawa 1 million, and according sa isang lecture, if I'm not mistaken, sa lecture ni Mr. Chinkitan, ang sinabi niya estimated depreciation value ng sasakyan ay 10% per year. Nakadepende pa yun kung magasgasan ng company driver sa sasakyan. So, pababa ang value sa sasakyan. So, mahihirapan. Mag-iiba-iba din talaga yung pag-estimate ng value na ilalagay mo sa iyong financial statement analysis. Ang usually ang pagbigay din ng value sa isang bagay, depende din pa sino yung analyze or sino yung nagbibigay din ng value sa isang item o yung company. So, next is our non-monetary are not reflected. So, it's important to note that while the financial statements contain lots of information, there's also a great deal of information that is not included. For example, nagkaroon ng changes ng managers, nagkaroon ng changement ng tao, nagkaroon ng mass resignation. So basically, mag-iiba-iba ang production or sa panahon na nagkaroon ng big changes. No? Pero ang lumalabas lang sa statements is yung numbers lang or cost lang ng inilugi or i-gain ng isang company without stating the reason. No? So, kaya according to some may readings, okay, important din daw talaga na magkaroon ng panglimang laman ng ang limang component ang financial statement analysis, which is the management discussion and analysis. Kasi nagkakaroon dito ng explanation kung bakit nagkakaroon din ng changes in numbers or money involved sa isang company. And lastly, no, the balance sheet is a time point report. So managers should look beyond the ratios, hindi lang basta numbers din. For example, dito ang industry trends, no? Technological changes, consumer tastes, economic factors. For example, hindi ko alam kung pasok pala sa trend, kung nagkaroon tayo ng trend ng Korean products. No? So basically, iba-iba din ang values, if I can remember correctly, nung 90s is na uso yung nagkaroon ng big trend to anime products, no? 90s, 2000, nagkaroon ng anime products. So, may naman nagkaroon ng trend ng Korean fashion, Korean products. No? So, kailangan sasabay din talaga ng company. And kung naiwan yung financial statement mo sa boundary ng dalawang trend, most likely bagsak yung magiging sales mo talaga. Consumer taste, syempre iba din. Iba na ang gusto ng millennials sa non-millennials. No? So dapat sasabay din talaga. Economic factor, syempre iba yung purchasing power ngayon kumpara before. Especially nung nagkaroon ng pandemic. So iba din talaga yung powers ng mga tao. So, yun for the intro of the financial statement analysis. No? Thank you. Now please focus your attention to Sir J.C. De La Torre's discussion on the formulas and applications of financial statement analysis.
Sir JC.
Hello? Sorry. Ano po, naririnig niyo po ako?
Yes po.
Uy. Again. Hello?
Yes po.
Sorry, Doc, nag-error lang po sa ano. Ayan, Doc Oliver already, can you see my screen by the way, Doc?
Yes, opo.
Ayan. Doc Oliver already presented, made an introduction with regards to the topic of financial state analysis. He was able to define what is financial analysis, what are the practical steps to do financial analysis, and he also mentioned the definition of the components of financial statements, the balance sheet, the income statement, the cash flows. It was significant. It was important to mention those, although it was just an overview, and the detailed discussion was already provided by the previous presenter. It was important to present the overview because the financial statement analysis mainly use the figures in financial statement. So that's why although it seems to be redundant, but it is really important to present also the overview of the financial statements. Now, since we are already Doc Oliver already discussed the concepts, the theories, and the limitations of financial statements, uh, my part will be to give a practical example, or let's dive into the actual computation of financial statement analysis. By the way, I'm Jester De La Torre. I will be discussing the part 2 of the financial statement analysis, the computation. Doc Oliver already mentioned the ways of financial statement analysis. These are horizontal analysis, or also known as trend analysis, the vertical analysis, also known as common size financial analysis, and the analysis using ratio. First is the horizontal analysis, or the trend analysis. As for the definition, it is the method of comparing and analyzing financial result of different accounting periods in each financial statement, account, and elements. So, example below is we are looking at the specific financial statement account, which is cash and cash equivalents. So, according to the definition, it is comparing the results of different accounting periods. So, on the example, we have cash and cash equivalent figure for 2020, and we have also figure for 2019. So the goal of horizontal analysis is to give us idea what is the movement between the two accounting periods. So as you can see, there is a peso change, which is 100,000, and we also express it in percentage of change. So from 2019 to 2020, there was an increase about 100,000 pesos in the cash and cash equivalents. That's equivalent to 25% increase versus the 2019 uh, cash and cash equivalents. So basically, ganyan lang yung horizontal analysis. No? Tinitingnan natin per accounts ng financial statement analysis. Then from there, makikita natin kung ano ba talaga yung nangyari sa financial status ng company. Um, I will I will demonstrate to you how to do it. We have here an example of statement of financial position, comparative year 2020 and 2019. So, as according to the definition, a horizontal analysis investigate on the changes versus different accounting periods. So we have here the amount change, we have here the percentage change. So as you can see, comparing the two years, we can say from there that there is already an increase in cash versus from prior years, 2019. That's 100,000 pesos. As a finance people, you can already make a sound decision or perhaps see what is happening. Like if you are not expecting an increase in cash, probably you will be asking why, bakit nag-increase yung cash natin, eh ang dami naman nating pinagkakagastusan this year. So parang on that sense, parang mapoprompt ka agad na maybe there's something wrong. So you need to verify, you need to check kung ano ba talaga yung nangyari. On the other hand, that's on the perspective of auditor. Kasi kung auditor ka, iimbestigahan mo kung meron bang anomaly eh. So kung auditor ka, ayan, titingnan mo na ay nag-increase yung cash natin, eh marami naman tayong pinagkagastusan this year. So as auditor, i-check mo ngayon, i-validate mo kung talaga bang less yung cash spent natin or probably meron tayong maraming cash collections kaya nag-increase yung cash natin. But on the finance manager side, which aids the finance manager to make a sound decision, masasabi niya na okay, meron naman tayong malaking cash so pwede nating bilhin yung malaking investment na yon. So para ganon. So ang goal lang ng horizontal analysis is tinitingnan yung trend per year. Actually, this is just a 2-year comparative, but we can make it 5 years, 10 years para makita natin yung trend or yung galaw ng negosyo. So like itong accounts receivable, nag-decrease siya by 35,500. So what happened? Probably ang nangyari nito, nag-decrease siya kasi nga nag-ramp up yung collection nila ng accounts receivable. Kaya kung mapapansin mo, nag-increase yung cash. Kasi nakolekta nila yung mga receivable once na makolekta yung receivable, cash na agad yun So parang ano naman siya, parang valid naman yung galaw ng mga figures natin. Kasi nag-decrease yung receivable, nakolekta siya, so nag-increase yung cash. So yung supplies, nag-decrease din siya. So probably wala kang masyadong binili na mga items. Wala kang mga bagong supplies na binili kasi pinapaubos mo muna yung mga supplies mo. Tapos yung land, ayun, nag-increase daw siya ng 60,000. So ngayon, iisipin mo, may binili ba tayong lupa ngayong taon na to? So if wala kang maalala, as finance manager, wala kang maalala na meron kang pinirmahang kontrata, na bumili kayo ng lupa, or wala kang pinirmahan na memorandum of agreement na you acquired specific land. So it's already a red flag on you na let's check this, let's validate this. Bakit nag-increase yung land natin by 60,000? That's about 20% versus 2019. So the same goes to other financial statement accounts. Ganun lang yung pagtingin pag sinasabi nating horizontal analysis. I did mention that horizontal analysis can be made several years kasi ang example ko 2 years lang, di ba? But it can be presented several years. Like for example, this one. Year 1, you have 250,000 sales revenue. Tapos sa year 2 mo, naging 270,000 na. So kung titingnan natin yung percentage change versus the original year 1, sa year 2, nag-increase siya ang rate na ng sales revenue niya is 108%. So ibig sabihin, versus year 1, nag-increase ng 8%. Tapos sa year 3, 118 na. Ibig sabihin, nag-increase ng 18% compare sa year 1. So from here, makikita mo yung trend ng negosyo na, okay, kumikita tayo, lumalaki yung sales revenue natin for the span of 5 years. So yan yung sinasabi ko na, kaya tinatawag din siyang trend analysis kasi from there, you can already establish the trend of the performance of the company. Ito balance sheet siya, so meron din tayong income statement. Ganun din yung pag-analyze niya, like titingnan mo lang din yung amount of change. This is just the difference, tapos percentage of change. Let's do it on our own. So, yun nga, lang siya, kukunin mo lang yung difference, so yan na yung change. Then percentage of change is ito, 1 million yung change divided by yung comparative niya which is 2019. So magkano ba ang percentage of change? So 25% yung increase ng net of sale niya versus 2019. So ganun lang siya, i-copy mo lang siya hanggang ganun lang yung niya. Per account kasi yung pag-analyze niya. So ganun lang din siya, magkano yung amount of change tapos magkano yung percentage of change. Ayan. Yun mo lang lahat, ganyan. So, the same with BS, balance sheet. Sorry. Ayan, difference lang din siya. How much is the difference? And then, of course, the percentage of change. Of course, this has no meaning if you don't, I mean, these are just figures, pero kung hindi mo siya alam kung paano i-interpret, this has no meaning. Pero kung alam mo yung meaning niya, like ito nga, nag-increase ng 100,000, interrelated siya sa accounts receivable, masasabi mo na nag-increase yung cash kasi nag-decrease yung accounts receivable. Kasi nga, may collection, may ramp up ng collection. So, ganun siya. Okay. Next is,
By the way, tell it to us, no, where did you base your your computation with regards to the year?
Doc, these are just samples, Doc. This is not related to actual performance, Doc.
No, but my point here is, di ba, pagka kinocompute natin to, how are you going to come up with yung tawag dito, yung percentage change, no? Sa natin binabase. Diba, the usual kinukuha natin siya doon sa base year.
Yes
What
po.
is the base year?
Yes po. Kung anong year yung pinagkukumperan mo, Doc.
Yes, so di ba sabi natin prior year.
Yes po.
Kinukuha natin, no? So kung ano yung pinakamatandang year diyan, yun yung kukuha natin, yung prior year. Yung as against with latest. And then we divide, yun yung ginawa mo kanina,
Yes
yung
po.
100 divide by 400.
Yes. The amount of change versus doon sa base year po, Doc.
Apo.
Okay. So, let's proceed now to the next financial analysis tool, which is the vertical analysis or common size FS analysis. As per definition, vertical analysis is the method of analyzing financial results, expressing each financial statement account and element as a component of base. So, component of base daw yung each financial account or element of financial statement. So, on the example below, we have cash, we have accounts receivable. If we say component of base, ang component of ang base nito should be the total asset. Parang si cash is just a component of total asset. So kung titingnan mo siya, cash which is 500,000 is just 46% of the total asset. Parang gano'n naman yung vertical analysis. Kaya siya tinawag na vertical analysis kasi ang pagtingin natin sa financial statement is from top to bottom. Yung sa horizontal, kaya siya tinawag na horizontal kasi ang tinitingnan natin is from left to right or right to left, depende kung paano mo in-arrange yung periods or yung years. So dito sa vertical analysis, from top to bottom yung tinitingnan natin. Kasi tinitingnan natin yung per account as component of a base. Let's try. So in the same sample balance sheet, we have here the 2020 common size financial statement and the 2019 common size financial statement. Ang sinasabi nung definition is each component of financial statement, each financial statement accounts is a component of a base. So on the asset sides, the base should be the total asset. That's why it's 100%, diba? And then cash is just a component of assets. So how much is cash in the total asset of the company? So it's just 46% out of the total asset of the company. So ang formula niyan, it's just cash divided by total asset, which is the base. So ito yung component, which is the cash, 500,000, and the base is the total asset, which is the 1 million. So ang percentage daw ni cash as component of asset is 46%. So yan yung tinatawag nating common size. Actually, pwede mo siyang ito kasi naka-comparative kasi siya, so pwede mo ding naka-vertical analysis ka na, naka-horizontal analysis ka pa kasi you transform your financial statement into common size or percentage of the base, tapos pwede mo pang i-compare yung mga percentages of the base. Like for example, on cash, 2019, cash is just 42% of the total asset. But suddenly, in 2020, it becomes 46% of the total asset. So from there, you can make analysis already na lumaki nga yung cash. Lumaki yung cash out of total asset natin. So parang ganun. But I just want to emphasize that yung common size financial statement or the vertical analysis is ito yon, yung pag ano lang natin, paghimay lang natin na yung financial statement accounts is part of the total base. Pero yung sinasabi kong ganon, i-analyze natin, i-compare natin, that's already part of horizontal analysis. That's why some of the finance officer, finance manager, finance people combine these tools in order to make a sound decision. So hindi siya exclusive na ay vertical analysis lang yung gagamitin ko. You can combine all the tools in order for you to make a sound decision. Okay, the same with liabilities and capital. This is capital because probably this is sole proprietor lang siguro kasi kung corporation to dapat shareholders equity siya. But nonetheless, ang point naman dito is how to make a common size financial statement or how to make vertical analysis. So the same as what we did in asset, the base is the total liabilities and capital. So accounts payable is just component of the base of the total liabilities and capital. So computation, the component is accounts payable, which is 151,500, and the total base is the 1 million. So makikita natin na accounts payable is just 14% of the total liabilities and capital. So the same with other accounts, ganun din yung pag-analyze niya. And then also you can also compare the common size financial statement kung ano ba yung nangyayari. Like for example, accounts payable, dati 2019, your accounts payable is just 10% of your total liabilities and capital. Then suddenly, on 2020, it becomes 14%. So ano yung posibleng nangyari? Probably, bumili kayo, lahat ng mga purchases nyo on account. Kaya tumaas yung accounts payable nyo. Ganun yung pag-analyze niya. But I just want to emphasize that the vertical analysis or common size analysis is ito yon. Yung yung vertical ay horizontal na analysis is already
Palapad.
yes,
Palapad.
yes, palapad siya. Yung ganito yung analysis ng horizontal, ganito
Oo.
yung analysis ng vertical.
Pababa.
Yes, tama po daw. Kaya ano siya, parang mabilis tandaan kasi nga vertical. Although some of the authors is used to use, parang ano nila, parang gustong-gusto nilang gamitin yung trend analysis tsaka yung common size, pero mahirap kasi siyang tandaan. Mas mabilis tandaan yung vertical analysis kasi from there, alam na natin kung paano siya i-analyze. Kung vertical siya, pataas, top to bottom. Kung horizontal siya, yung pahalang, yung trend yung titingnan natin. Okay? So, example, how to do it. We have here a blank common size financial statement. So, let's transform it into common size. So, this example is horizontal, this will be our vertical. Okay. So i-transform natin siya into common size. So how to do that? Component of the base. So let's first analyze what is the base of this part, this first section. The base should be the total asset, right? So this should be 100% kasi component of its own, di ba? 100% 'yun. So on cash, the component is the cash, which is 500,000, divided by the total base, which is the total asset, is 46%. And then the same accounts receivable, this is the component, the total base is the asset. So ganun lang siya, i-copy ko lang siya para mabilis ha, pero if gusto mong isa-isahin, ganun lang siya. Ulit-ulit lang yung formula niya, pero for the sake na mabilis yung discussion natin. So for 2019, ganun din, component divided by the total base, which is the total asset for that year. For that, dapat align siya. Dapat ang kukunin mo yung on the same period. Hindi pwedeng tumawid ng kabilang period. Dapat on the same period din para tama. And then ang goal mo dapat ang total niya nito 100%. Kung hindi nag 100% siya, ibig sabihin may mali ka. May maling nangyari sa ginawa mo. Kasi kung ito-total mo yung component of the total, dapat 100% siya, di ba?
Yes.
So kung hindi siya total 100%, there's something wrong. So you re-evaluate your computation. Okay, ganun din siya. So the same with accounts receivable, kopya ko lang para mabilis. Ganun siya. Ayan. So the same goes with this, the same formula. Ganun lang din siya. I-kopya ko lang para mabilis. The same goes with this. Diba? And should be ito, dapat 100% din ito kasi divided by on its own eh. So, confirm natin kung 100%. Yes, that's 100%. Ayan, 100%. So, tama yung ginawa natin. So, ito, ito using comparing the accounting period is horizontal analysis. Comparing the component of the accounts is vertical analysis or common size analysis. The same goes with net income. Ganun lang din siya. Component. Dito naman sa income
Ayan,
statement, ang
totoo
base
yan,
nito,
nakakalito yan.
yes, nakakalito daw kasi hindi to kagaya ng balance sheet na ang base
Yes.
nito is yung total asset. On the other hand, sa income statement, ang base nito is the net sale.
Mm-mm.
100%, ay sorry, bakit yung ano? So dapat ito yung kasi kumbaga ito yung base so dapat ito yung 100%, 'di ba? And then the component of net asset is the cost of goods sold, the gross profit, and the other components of the income statement. So ibig sabihin, si cost of goods sold is how many percent of the total base or how many percent of net sales? So 60%. So the same goes with this. Ganun din siya. Of course, on 2019 figures dapat kukunin natin. So the same with gross profit, how much siya on the total sales? 40%. The same with 2019, ganun din siya. Ganun yung compute niya. So for other income, this is the component of the base, this is the total. The sales is the total base, di ba? Okay. So the same goes with others. Ganun din siya. Divided by the total. Ang una mong hahanapin is ano yung total base para tama yung computation mo. Para once na mahanap mo yung total base, doon na i-divide mo na lang yung component divided by the total base. So, ikopya ko na lang para mabilis. Tapos ang checking din naman nito kasi itong mga to kasi is component of the base. I mean component of net sales. So dapat ang total nito 100%. Ay kaso hindi pala. Kasi naka-formula pala siya, sorry. So ibig sabihin from 60%, out of that 60% is 40% gross profit. So 100% siya. Tapos out of gross profit, di ba ang formula is i-add yung other income. So from gross profit, i-add daw yung other income. Ito yung revenue, which is 44% daw out of net sale. Tama ba? Ayan. Gross profit plus other income is equal to 44%. So tama tayo kasi lumabas dito kasi ang formula for revenue is gross profit plus other income, di ba? Sabi kasi dito, revenue is 44%. So kung titingnan mo, i-add mo yung common size mo, gross profit plus, susundan mo lang yung formula niya. So gross profit plus other income is 44%. So we can say that it is correct. Tapos sa net income naman daw, ang formula ni net income is revenue minus operating expense. Tama ba? 70%. Tama naman. Ayan daw yung net income is 70%. Okay. So this is common size analysis. This is horizontal. So, ayan. The next financial tool that we will use is the ratio analysis. So we were able to compare ang pinagkaiba ng horizontal analysis and vertical analysis. Other tools that finance people also use to investigate the movement in the financial position or the performance of the company is ratio analysis. For definition, ratio analysis is a quantitative analysis technique applied by an entity to be able to assess the company's liquidity, solvency, profitability, and operational efficiency through scrutiny of account balances reported in the balance sheet and income statement. So ang goal ng ratio analysis is titingnan niya yung mga ito, liquidity, hindi pala ako nakapresent. Liquidity, solvency, profitability, and efficiency. Meron niyang kanya-kanyang mga ratio or mga formula na gagamitin para ma-assess mo yung liquidity, solvency, profitability, and efficiency of the company. We will discuss it one by one. It can be categorized generally into liquidity ratio for investigating liquidity of the company, solvency ratio for the solvency of the company. This is also termed as leverage ratio as discussed by Doc Oliver. Other authors used leverage ratio, but other authors also use solvency ratio, but these are all the same. And the next is the profitability ratio, which is to investigate the profitability of the company. And then efficiency ratio, the other term for this, which was discussed by Doc Oliver, is the activity ratio. Activity ratio or efficiency ratio, parehas lang yun. So let's discuss one by one.
Actually, kaya nakakaiba-iba yan, Sir Jester.
Yes po, Doc.
Ano, with regards to the author, minsan iba-iba yung ginagamit na term, pero
Yes po.
actually isa lang yung ibig sabihin.
Yeah, Doc. Depende sa author. Usually, pag
Yes.
mga American authors, yung leverage ratio yung ginagamit.
Oo.
Yes po, Doc. Thank you, Doc. So let's discuss one by one. First is the liquidity ratio. Under liquidity ratio, these are the ratios under liquidity ratio. Remember, liquidity ratio determines whether an entity can be able to pay for current liabilities as they become due with the use of current assets. On the previous discussion with Module 2, we were able to define what is current liabilities, di ba? And then we were able to also to define what is current asset. So, ibig sabihin lang ng liquidity ratio, it will answer the question, can the company pay the current liability using its current assets? So, these are the ratios that can be used in order to answer that question. Let's discuss it one by one. First is the current ratio. Ang current ratio daw answers the question, can the company pay for their current liabilities with current assets? So the formula is current assets divided by current liabilities. I have here an example of financial statement. The financial statement of PCU, GSB, and Finman Company. Comparative statement of financial position, December 31, 2020 and 2019. Sabi dito, ang formula daw ng current ratio is current assets divided by current liability. Now first, let's identify what is current asset. Pero luckily, ito presented na siya. Ito yung total current asset. So the usual component of current asset is cash and cash equivalents, trade and other receivables, marketable equity, merchandise. This was all discussed by the first group on module 2. So sabi dito, ang formula daw ng current ratio is current assets divided by current liabilities. Let's try. Current ratio daw, current assets divided by current liabilities. This one. Tama? So what is the ratio? 1.6. Tama. Ito yung answer ko para lang may comparison tayo na tama yung computation natin. So tama yung na-compute natin. The formula is current asset. Ito. Divided by current. Wait lang, i-highlight ko lang. Ito yon, current asset divided by current liabilities. That's for 2020. How about 2019? So the same, current asset divided by current liabilities. Let's compute. For 2019, current assets divided by current liabilities. So the current ratio is 1.48, or you can express it in percentage. The same lang yung meaning niya. So basta ang interpretation niyan, so those are just number pero meron niyang meaning. Sabi dito, ang interpretation ng result na nakuha natin is for both years, the entity's current assets are larger than current liabilities. The entity can pay for their current liabilities using their current assets since the ratio is greater than 1. So we must remember, if the current ratio is greater than 1, entity can pay current liability using current asset. Ibig sabihin, mas madami yung current asset natin na pangbayad doon sa current liabilities natin. Remember, if we say current, ibig sabihin within 12 months or within 1 year magju-due siya. So ibig sabihin, may mga available kang current asset na mababayaran mo yung mga current liabilities mo na magju-due na siya within the year. So if the current ratio daw is equal to 1, ang ibig sabihin niyan, yung current asset mo is just equal to current liabilities. So parang saktong-sakto lang yung current assets mo na pangbayad sa current liabilities mo. On the other hand, if the current liabilities is less than 1, ibig sabihin, this is unfavorable to the company. Less than 1 siya eh. Entity cannot pay current liabilities using current asset. Ibig sabihin, hindi sapat yung current asset mo na pangbayad mo sa current liabilities. Kasi less than 1 na siya eh, yung ratio niya. So, ganun yung interpretation. So, if we look at the computation that we have, in 2020, meron siyang 1.6. In 2019, meron siyang 1.8. Those are all more than 1. So, ibig sabihin, favorable pa rin siya. But if we try to compare it, mas better si 2020 kasi mas mataas yung current ratio niya eh. 'Di ba? Mas kasi dagdag greater than 1 the better. So ibig sabihin mas malaki, mas greater than 1 ito eh, 1.62 compare sa 1.48. So mas maganda yung current ratio ng 2020 versus ng 2019. Okay? Next is the acid test ratio or the quick ratio. Other authors use quick ratio, but these are all the same. The formula is quick assets divided by current liabilities. Ginagamit itong ratio na to answer the question, can the company pay for their current liabilities with quick assets? Quick assets, I think Doc Hester also mentioned this quick assets if I remember it correctly. But anyway, quick assets are, in layman's term, yun yung pwedeng agad-agad i-convert mo into cash. Yan yung mga quick assets. What are the examples of quick assets? Of course, the cash itself, di ba? Mga petty cash, yung mga accounts receivable, yung mga marketable securities, those are quick assets. Kasi nga, readily available siya to convert it into cash para pambayad doon sa current liabilities mo. So let's have an example. Sabi dito, ang formula daw is quick assets divided by current liabilities. So let's identify what are the quick assets here. Quick assets, sabi, is yung readily available or convertible into cash. Usually, these are cash and cash equivalents, trade and other receivable, and marketable securities. Ito yun. Merchandise inventory, hindi siya quick asset kasi nga, once mabenta mo yung inventory, pupunta pa siya sa accounts receivable eh. So, hindi siya diretsong cash. The same, of course, with other current assets. So, using the formula, sabi ng formula is quick assets divided by current liabilities. So, kunin muna natin yung 2019. So, ang total ng quick assets for 2020 is 3 million and for 2019 is 2 million. So, ito na yung quick assets natin. Sa formula, ito yung denominator. Tapos, current liabilities. Sa current liabilities, wala namang problema kasi provided naman ito yon. Provided naman, so hindi na kailangan i-compute. Now, let's apply the formula. Sabi dito, current assets divided by current liabilities. Of course, we are in 2020. Dapat 2020 din yung gamitin natin. So, yan yung quick asset for 2019. Then for 2020. Then for 2019, of course, quick asset ng 2019 divided by current liabilities ng 2019. So, the acid test ratio or the quick ratio for 2019 and 2020. Anong ibig sabihin yan? May interpretation din yan. Sabi dito, for both years, the entity's quick assets are larger than current liabilities. The entity can pay for their current liabilities using their quick assets since the ratio is greater than 1. In layman's term, may available kang cash or readily convertible into cash na pangbayad mo para sa maturing current liabilities mo. So sabi dito, if the acid test ratio or the quick ratio is greater than 1, it is favorable. Ibig sabihin, entity can pay the current liabilities using the quick assets or the assets that are readily available convertible into cash. Acid test ratio is equal to 1, ibig sabihin, saktong-sakto lang yung quick asset mo to pay for your current liabilities. And if the acid test ratio or the quick ratio is less than 1, this is unfavorable to the company. Kasi ibig sabihin nito, entity cannot pay your current liability using your current quick assets. So, ibig sabihin, hindi sasapat yung quick assets mo pang bayad mo sa current liabilities mo. Okay? Next is the cash ratio. Ang sinasagot naman ng cash ratio na question is, can the company's cash pay for their current liabilities? So kung mapapansin mo, parang naka-specific na siya, ito current assets lang. Tapos ito quick assets naman. Ngayon, exclusive lang talaga siya sa cash. Kumbaga, kaya ba ng cash mo na bayaran yung current liabilities mo? So ang formula daw ng cash ratio is total cash divided by current liabilities. Let's have an example. Here, your cash is ito, di ba? Ito yung cash mo. According to the formula, total cash divided by current liabilities. So ito pa rin, gagamitin mo the same. So let's apply the formula. Let's compute for the cash ratio for 2020. Formula is cash divided by current liabilities. So cash for 2020 is this one divided by total current liabilities for 2020. So your cash ratio for 2020 is 0.83. Tapos for 2019, the same. Cash divided by current liabilities. So that's your 2019. What is the meaning of that numbers? May interpretation din yan. Sabi dito, for both years, the entity's current liabilities are larger than cash. The entity cannot pay for their current liabilities using their total cash since the ratio is less than 1. Ibig sabihin, since less than 1 yung nakuha nating numbers, ibig sabihin, hindi sasapat yung cash ng kumpanya para bayaran yung current liabilities niya. We must remember that if cash ratio is greater than 1, that's favorable for the company. Ibig sabihin, sobra-sobra yung cash niya na pangbayad ng current liabilities. While if the cash ratio is just equal to 1, ibig sabihin, saktong-sakto lang yung cash mo, pambayad mo sa current liabilities mo. But if the cash ratio is less than 1, this is unfavorable to the company. Entity cannot pay your current liability using your total cash. So kung less than 1 na siya, ibig sabihin, hindi sasapat yung cash mo na pambayad sa current liabilities mo. Okay? Next is the solvency ratio. Solvency ratios determine whether an entity has more ownership rather than debts. It is also called leverage ratio on other authors. Most commonly, mga American authors yung gumagamit ng leverage ratios. These ratios involve comparisons of debt, asset, equity, and interest. So tinitingnan nitong solvency ratio kung ano yung level of debt mo, ano yung level of asset, level of equity, and level of interest. The formula, the ratios under this solvency ratio is debt ratio, debt to equity ratio, and times interest earned ratio. Let's discuss it one by one. First is debt ratio. Debt ratio answers the question, how much of the assets are financed by debt? Okay, marami kang asset, pero paano mo naman finance yun? Is that through utang, debt, or is that through stocks? So yun yung masasagot ni debt ratio. Magkano doon sa assets mo ang financed by debt or sa utang? Ang formula is total liabilities divided by total assets. Let's have an example. Sabi, total assets divided by, so ito yun, total assets. Divided by, ano yun, sorry. Total liabilities pala, divided by total assets. So, asan yung total liabilities mo? Wala, no? Wala, hindi siya nakatotal. Total assets is equal to total non-current liabilities plus total current liabilities. So, ito yung for 2020. Total niyan is the total liabilities. This is for 2019. So, total lang ng dalawang to. Yan yung total liabilities mo. Okay? So, let's apply the formula. Debt ratio. Ano nga yung formula? Total liabilities divided by...
Anak, wait. You cannot apply that kasi magkasama yung accounts payable tsaka non-current. You only go with the accounts payable.
Doc?
Ayan, yan. Di ba, total mo, non-current liability. Other non-current.
Hindi, kasi ang formula kasi Doc is total liabilities, Doc.
Oh, total liabilities. So, patingin. Balik
So,
mo.
ang formula daw po ng debt ratio is total
Total
liabilities.
liabilities.
Yes po,
So,
hindi
it's
po
the
siya
total.
total current.
Yeah.
Oo,
So,
yung
liabilities.
total liability ay yung current po sa current ratio po 'yon.
Yes.
Yes. Tama po, Doc. I will proceed na po, Doc.
Yeah. Total
Yes.
liabilities.
So, applying the formula, total liabilities, ito 'yon for 2020
Yan.
divided by total asset for 2020. So, this is your ano ba to? Debt ratio for 2020. So, for 2019, ito yung total liabilities mo for 2019 divided by total asset of 2019. Ito yung debt ratio mo for 2019. Anong ibig sabihin yan? May interpretation din yan, syempre. Ang ibig sabihin niya, ang ibig sabihin niyan is for 2020 daw, 53.79% of assets are financed by debt. For 2019, 65% of assets are financed by debt. In both years, debt is greater than equity since debt ratios are both higher than 50%. So ang ibig sabihin nito is out of your total assets, ang finance daw through utang is 53% sa 2020. Sa 2019 is 65% out of your assets is financed through utang. Kaya ang sinasabi niya dito, debt is greater than equity kasi nga kung mapapansin mo yung 'di ba as discussed with Doc Hester, the formula for accounting formula is asset is equal to liabilities and equity. So, ibig sabihin, ang composition ng asset mo is the liabilities and the owner's equity or the stockholder's equity. Kaya sinasabi dito na debt is greater than kahit hindi pa natin kinumpute na kung magkano yung para sa equity, alam na natin agad na debt is greater than equity since debt ratio are both higher than 50%. Kasi kung half-half lang sila, dapat 50% lang yun, di ba? 53% na tong 2020, sa 2019, 65%. So that's more than half. Hindi na siya half-half. Mas malaki yung financed by your debt compared doon sa owner's equity mo. Okay?
So what does that mean?
Ang ibig sabihin po, Doc, yung mga yung assets mo is financed by utang. Kumbaga, meron ka ngang malaking assets, pero saan galing? Paano mo na-acquire yung mga assets na
So
yun? Through utang.
That means to say you cannot borrow anymore. Hindi na kaya.
Yes, Doc. Tinitingnan din yan ng mga bangko kung parang basis din siya para pautangin ka ng panibagong bank loan. So that's why you must maintain. Opo. So you must maintain a very good debt ratio para pautangin ka ng bangko kasi kung masyado nang malaki yung debt ratio mo, baka hindi ka na sasabihin niya, halos lahat ng assets mo galing sa utang, so papautangin pa kita, parang ganon in layman's term.
Hindi mo na kaya magbayad kahit ibayad mo yung asset mo, kulang.
Yes, Doc. Kasi yung mga assets mo galing din naman sa utang, may babayaran pa yun. Yes. So we must remember that when debt ratio is less than 50%, assets are financed more by equity. When debt ratio less than 50%. Ito yung diniscuss ko kanina, 'di ba? When debt ratio is greater than 50%, assets are financed more by debt. When both debt and equity is 50%, assets are financed equally by debt. So 50-50 sila sa debt and equity. Okay? Next is debt to equity ratio. Debt to equity ratio answers the question, which has more weight, the debt or the equity? So parang in relation siya dun sa debt to equity ratio. Ito, tinitingnan na talaga kung sino ang mas mabigat sa kumpanya mo. Kung sino yung mas malaki sa kumpanya mo. Is it the debt or the utang or the owner's equity or the shareholder's equity? Ito yung sinasagot ng debt to equity ratio. The formula for debt to equity ratio is total liabilities divided by shareholder's equity. Let's try. So, sabi ng formula, total liabilities divided by shareholder. Let's identify those. Total liabilities, ito yun, di ba? Kinumpute na natin. Total liabilities to eh. So, ito yun. And then yung total equity mo, ito, hindi mo na siya kailangan computein kasi naka-line item na siya sa financial statement mo. So, let's apply the formula. Sabi, ano yung formula? Total liabilities divided by shareholders' equity. Total liabilities divided by shareholders equity for 2020. So, yan siya. For 2019, the same, divided by total shareholders equity. So, yan yung mga lumabas na numbers. Anong ibig sabihin yan? Sabi dito, for both years, debt has more weight than equity since both ratio are greater than 1. So, ibig sabihin, since ang lumabas na ratio is more than 1, mas malaki daw yung debt mo compare sa equity mo. Kasi kung titingnan mo yung formula, total liabilities divided by shareholders, kung less than 1 siya, ibig sabihin mas maliit yung denominator, which is the total liabilities. 'Di ba? So ibig sabihin if more than 1 or even kung 1 siya, ibig sabihin your total liabilities is just equal with your shareholders equity. And then if greater than 1 daw siya, debt has more weight than equity. So mas malaki yung total liabilities mo compare sa shareholders equity mo. But when debt to equity ratio is equal to 1, as mentioned, parehas lang siya. 50-50 yung total liabilities mo and shareholders equity. So ibig sabihin daw, rising debt ratio means the company resorts to more debt and more interest expense. So kumbaga, ang financing strategy ng kumpanya is debt financing. Kumbaga, kumukuha siya ng pera doon sa pangungutang. So kasi pag nangungutang ka kasi may corresponding interest expense yun eh. So kaya ang sinasabi dito, if the debt ratio is rising, ibig sabihin the company is resorting to debt financing and it equates to more interest expense kasi pag utang may interest expense yan eh. So falling debt ratio means the company is shifting from more to equity. So kabaliktaran, kung falling daw yung debt ratio, pababa siya, ibig sabihin nagre-resort yung company into equity financing. So nag-i-issue ng stocks, ganun. Next is the times interest earned ratio. This ratio answers the question, how many times can an entity pay for interest expense with their operating income? So, gaano ka-capable yung company magbayad ng interest expense gamit yung operating income nila? So, the formula is earnings before interest and taxes divided by interest expense. Let's try. Of course, we are talking about operating income. So, makikita natin yung numbers sa income statement, hindi sa balance sheet. So, this is an example of income statement. So, sabi dito, ang formula daw niya is earnings before interest and taxes divided by interest. So, let's identify first. So, this is your interest expense, and this is your operating income. Right? Tama ba? Earnings before interest and taxes. Earnings before interest and taxes is the operating income. Kasi after ng operating income, ibabawas mo na yung interest expense eh. Tsaka taxes eh.
taxes. So,
Yes. So,
yung
ibig sabihin, ang earnings before interest expense and taxes is the operating income. Okay? So, let's apply the formula. Sabi, earnings before interest and expense or the operating income divided by the interest expense. That is hindi comparative yung income statement natin. So, hindi natin mako-compare. But anyway, for illustration purposes, kung paano siya i-compute, ito yung times interest earned ratio ng kumpanya. Anong ibig sabihin yan? What is the interpretation? Sabi dito, the company's operating income can cover interest payments for 150 times. Pero hindi ito ibig sabihin na 150 times ka magbabayad in a year ha. Ito lang is nagsasabi kung gaano ka capable. So kung 150 times ka daw kayang magbayad in a year, you are much capable kasi interest expense is usually paid monthly eh. So this only shows that the capability of the company to pay the interest expense using its operating income is very high, 150 times eh. So sabi dito, we must remember that the higher the times interest earned ratio, the better. It shows how the company is able to meet its interest obligation with the income that it earns. Okay? Next is the efficiency ratio. Efficiency ratio measures how well does an entity utilizes their assets and resources to generate income. So under this efficiency ratio are the asset turnover, ratio, inventory turnover ratio, accounts receivable turnover ratio. By the way, itong efficiency ratio, ang ibang term nito ng ibang author is activity ratio. Activity ratio as discussed with Doc Oliver, the same lang siya ng efficiency ratio. Other
Yes.
authors use activity ratio but they are all the same and they have the same ratios also na ginagamit, which is the asset turnover, inventory turnover, and the accounts receivable turnover. Let's discuss it one by one. Asset turnover daw answers the question, how many times can an entity generate sales with their total assets? So, gaano ka-capable yung company mo na mag-generate ng sales gamit yung asset resources niya. So, yun yung sinasagot ng asset turnover ratio. Ang formula daw is net sales divided by average total assets. So, let's apply. The formula, let's identify first the components of the formula. Sabi doon, net sales daw. Ito yung net sales. This is the net sales and the denominator is
Average total say
average
assets.
total assets. Yes. So of course, we are talking about assets. So nandyan siya sa balance sheet. Okay? So this is your total assets. Pero hindi lang kasi siya basta-basta total assets. Ang sinasabi dito,
Average.
average total assets.
So you have to divide it by 2.
Yes po, Doc. So, if the problem is, if the problem gives only 1 year, ibig sabihin you don't need to average the
Yes.
the total assets. But since the given on the problem is comparative, so ibig sabihin meron kang beginning, meron ka ding ending. Bakit
Ending.
bakit ko nasabi na beginning ng 2020 si 2019? Ito yung asset niya nung nagtapos yung 2019 eh. So
Yes.
kung katapusan siya ng 2019, ibig sabihin beginning siya ni 2020.
2020.
Yes. And then dito, ito yung ending ng 2020. So let's apply the formula. We have
Add,
identified.
add it and then divide.
Yes po, Doc. So let's compute first. Let's compute first the average total assets. So simply, average daw eh. So i-add lang natin, yung divide 2.
Yeah, add it and then divide by 2.
Yes po, Doc. So simple average lang siya, hindi siya weighted average. So this is now our total average total assets. So let's apply the formula. Sabi ng formula, net assets divided by total average. Ay, mali. Bakit mali? Average, tama naman. Average total assets.
O kasi may beginning kami ending. Add mo siya divided by 2.
Hindi ko pa na-divide ng 2, Doc. Sorry.
Ay siya. Divided by 2.
Sorry. Na-miss ko lang siya. So, ito
Okay.
dapat yung
Dapat
average.
12.
Yes. So, ayan. Tama na siya. Sorry. I missed to divide 2. But the formula is,
Okay lang. Actually, sa totoo lang talaga, numbers yan. Talaga nakakalito in a way.
yes
Kaya
po, Doc.
talaga you have to focus on it eh.
Yeah. So, meron ka lang ma-miss na isa, mali na
Yes.
siya. Kasi the formula is very strict. You need to apply the formula strictly. May ma-miss ka na something sa formula, wrong na agad yung makukuha mong figures. So, based dito, ang asset turnover ratio daw ng kumpanyang to is 0.32. Anong ibig sabihin yan? The interpretation is the company's asset can only generate sales up to 0.32 times. So, that's less than 1. So sabi dito, the higher the asset turnover ratio, the better. It shows how the company is able to generate sales. Ano bang benchmark ng asset turnover? Parang 5 yata. Yan, 2.5 yung benchmark standard. So ibig sabihin, pag meron kang asset turnover ratio na 2.5 or more, ibig sabihin goods na yung kumpanya mo. I mean, goods yung performance ng asset turnover mo. Pero on this case, less than siya. Actually, 0.32 lang siya. So, unfavorable siya sa company. Ang ibig sabihin na to, mabagal yung pag-convert niya ng asset resources niya into sales. Kasi ang sabi dito, ang sinasagot na ng asset turnover is how many times can an entity generate sales with their total assets. So, since less than siya sa average standard ng industry, which is 2.5, ibig sabihin, masasabi mo na unfavorable siya. Mababa siya sa standard o sa benchmark ng other industry. Okay? Next is the inventory turnover ratio. It answers the question, how many times can an entity sell their inventories and have it replaced within the period? So ang sinasabi dito, kung gaano mo kabilis i-dispose yung inventories mo through benta at saka ma-replace, ma-restock mo ulit yung inventories mo. The formula is cost of goods sold divided by average inventory. Ayan, average na naman. So, ibig sabihin, dapat meron kang beginning and ending inventory. Pero if the problem provides only 1 year, ibig sabihin, no need to average the inventory. Let's apply the formula. Let's identify first the component of the formula. Cost of goods sold. This is the cost of goods sold. And then, the inventory, average inventory. Where is the inventory? Ito. This is your inventory. Diba? But sabi kasi doon, average eh. Say, you have the beginning and you have the ending, so average mo siya. Divided by, don't forget the divided by 2. Okay. We have now the average inventory and we have now the cost of goods sold. Let's apply the formula. Cost of goods sold divided by average inventory. 2.27. So 2.27 daw yung asset ay inventory turnover. What does that mean? Ang interpretation is the company's inventory turnover is low. A low turnover might mean weak sales and excess inventory. A high turnover might mean strong sales and is insufficient inventory. Kasi ang sabi dito, masasabi daw ng inventory turnover kung paano kabilis ibenta yung inventories. At the same time, paano mo siya kabilis ma-replace. So, sabi dito 2.27, sabi daw dito low. Bakit low? Ano ba yung standard? Oh. Ano ba yung ano? In general na lang. Ayan, 5. 5 or so dapat more than 5 daw ang standard. So ito less than 5 siya. So low talaga siya, mababa siya sa benchmark ng ibang industry. So mako-confirm natin siya na mababa siya gamit yung day sales inventory. This is related to the inventory turnover and this will also confirm that your 2.27 inventory turnover is really low because day sales inventory answers the question how many days does an entity hold on their inventory before a sales transaction. So yan yung sinasabi ng day sales inventory. So let's apply the formula. Sabi ng formula, 365. Bakit 365? Kasi it's the number of days in a year. Tapos divided by inventory turnover. So the formula should be 365 divided by inventory turnover. So ito yun. So kung makikita niyo yung formula, the formula daw is 365 divided by inventory turnover. Yung inventory turnover natin is 2.27. So ibig sabihin, hindi mo makakalculate yung day sales inventory if you are not able to come up with the inventory turnover ratio kasi part siya ng formula ng day sales in inventory. Meron daw siyang 160. What does that mean? Ang sabi dito, walang sinabi. But anyway, ang interpretation lang niyan is it will take you 160 days before mo ma-convert ang inventory mo into sales transaction. 160 days is more than 1 month. So mga ilang buwan mo siya bago mo siya mabenta. 4 na buwan. So by this, we can confirm that 2.27 inventory turnover is really low. As you can see, with the day sales in inventory, it will take you 160 days before you can convert your inventory into sales. Bago mo siya mabenta, kailangan mo ng 4 na buwan. More than 4 months. More than 4 months kasi ang 4 months 120 eh. So more than 4 months mo siya bago mo siya ma-convert into sales. So 2.27 is really low. The standard is 5, sabi. Okay, next, let's move on to accounts receivable turnover ratio. it answers the question, how many times can an entity turn their receivables to cash for a certain period? So, ito naman ang nagsasabi naman to kung gaano mo kabilis makokolekta yung mga receivables mo. You can convert it into cash. So, ito yung formula na gagamitin. Formula is net credit sales divided by average accounts receivable. Average accounts receivable na naman. So, let's apply the formula. Let's identify the components of the formula first. The net credit sales. If silent ang problem, ibig sabihin, credit yan lahat, credit sales. But sometimes the problem says, gross sales, tapos, ano niya, parang nakahimay na ito yung credit sales, ito yung cash sales. So, dapat yung credit sales lang. Pero dito sa problem na to, silent naman kasi yung sales if it's credit or not. So, let's assume na lahat ng sales is credit. So, that's the net credit sale. And then, let's find for the average receivable. This is your receivable. Average daw eh. So, plus, you just add the beginning plus ending divided by 2 to get the average. Okay, we have now the components of the formula. Let's apply. Sabi doon, net credit sales divided by average receivable. So, ito yung accounts receivable turnover ratio mo. Anong ibig sabihin nito? In a period, the company turns receivable into cash 5.2 times over the whole period. Sabi, a low turnover signals weak collection. So kung mababa yung receivable turnover mo, ibig sabihin, mahina yung collection efforts mo. If it is high, ibig sabihin, your collection efforts ramp up. Ano ba yung average standard? Ano ba lang sinabi? Ayan. Okay, agriculture 51, 56. So masyadong mababa nga yung 5.2. So let's confirm kung ilang araw ba yan yung sinasabing 5.2 times using the days in receivable. Itong days in receivable answers the question, how many days does an entity wait for a receivable to become cash? So ilang araw bago mo siya makolekta? The formula is 365 days, which is for 1 year, divided by accounts receivable turnover. Let's apply the formula. 365 divided by your accounts receivable turnover, na-complete mo na siya, so 70.2. Ibig sabihin, you have 70 days before mo siya makolekta. So that's more than 2 months. More than 2 months mo bago mo makolekta yung mga receivables mo. So ganun yung interpretation niya.
So that means, maghahanap ko muna ng pera dahil hindi ka pa nakakakolekta para mag-produce ka ulit.
Yes, so babantayan mo din yung cash availability mo kasi
Yes.
sinasabi mo, ay yung collection ko within 3 months pa wala ka ng cash. So yun, kaya dapat
Ano ka
bantay.
magpo-produce ulit na for another sales?
Yes, kasi pag syempre everyday yung production mo, paano pag wala kang perang gagamitin for the production? Wala ka pang ine-expect na pera in the coming 2 months kasi more than 2 months yung collection mo ng mga receivable mo. So yun, it will aid the finance manager to decide what to do. Kung mag-financing din na ba siya para meron siyang cash na magamit. Kasi kung hindi mo alam to, mag-expect ka, nandyan naman yung receivable ko. But in reality, your receivable can be converted only into cash after 2 months pa or 3 months. So that's why it really these ratios are really important to aid the decision making of the finance manager. Next is the profitability ratio. Profitability ratio measures how well does an entity generate income that relates to the revenue, operating costs, assets, and capital. So the formula, the ratios under this profitability ratio is gross profit ratio, return on assets, and return on equity. Let's discuss it one by one. Return on assets answers the question, how much income was returned in the usage of assets to generate profit? So, sa mga asset na ginagamit mo, magkano daw yung na-return doon para sa profit. So the formula is net income divided by total assets. Let's apply the formula. Let's identify the component of the formula. Net income. Asan yung net income ito? Net income, tapos total assets.
Balance sheet.
Total assets, this one. So you have identified the components of the formula. Let's apply the formula. Net income divided by total assets for 2020. Mali. Average. Income divided by total assets. Baka average siguro. ISB 9. Gross profit. Bakit gross profit? Mali. This is the correct one kasi sabi ng formula is net income eh. So net income. Sorry, mali yung reference ko. Mali to. Naghahanap ako. Mali pala yan. Kasi ang formula is correct. Net income divided by total assets. Tama naman. Ito yung net income divided by total assets for 2020. Anong ibig sabihin yan? Sabi is the entity enjoyed 10.63% returns in the usage of its assets to generate profit. So the higher the return, the better. Ibig sabihin, mas malaki yung bumabalik sa'yo or na-generate mo na profit using your assets. Yun lang yung ibig sabihin ng return on assets. So kaya sinasabi dito, the higher the better. Next is the return on equity. It answers the question how much income was returned in the usage of equity or generate profit. The same idea with the return on asset is just that how much profit is generated using your equity naman instead of assets. So the formula is net income divided by shareholders' equity. Let's identify the components of the formula. Ay, net income pa rin naman. And then, where is the shareholders' equity?
Baba.
This one, shareholders' equity. Okay. So we have identified the components of the formula. Let's apply the formula. Net income divided by equity.
Yes, Ma'am Esther.
Sir, parang tama naman po yata yung inyo. Parang na-move si gross profit ratio.
Oh, yeah. Tama, Doc. Kaya nga,
Oo.
nalito ako, yes. Let's do it again. Mali pala yung column. Sorry, Doc. Yeah. Napansin ko din siya kasi nung nandyan ako sa return on equity, blanco na siya. Okay. Thank you, Doc. So, parang na-skip tayo sa gross profit ratio, no? Kasi ang gross profit ratio daw is gross profit divided by net sale.
Let's see.
So, gross profit, where is the gross profit? Ito,
Yeah.
divided by the net sale. The net sale is ito. Ayan, tama siya. And then let's recompute the return on assets. Ano nga yung formula ng return on assets? Net income
Net
divided by
income
total
divided by
assets.
total.
Okay. Total assets. Nasa taas. Ayun. Tama nga siya. Okay. So yung return on equity, the same. Net income divided by, but instead of assets, shareholders equity daw. Ayan. So ang ibig sabihin nito, the interpretation of that is that the entity enjoyed 23% return to the shareholders investment. The higher the return, the better. So ibig sabihin, itong return on equity, ito yung mostly tinitingnan ng mga investor. Kasi ito yung percentage of return on their investment eh. So kumbaga, the higher the return on equity, the better. I mean, ibig
Yes.
sabihin, mas malaki probably yung dividends na ibibigay at the end of the year. Okay? So that's all. Thank you very much
Yes,
for
oo.
patiently listening to me.
Hindi talaga actually matrabaho 'yan, no?
Yes po, Doc.
I hope the other colleagues natin na-enjoy nila, no? As how did you do it in calculating. Kasi sa totoo lang, no, even in the undergrad, pagka dinadaanan namin 'yan, naku, nagsisisimangot sila. Sabi ko, you're finance majors, you should know this. Hindi po pwede, sige, bibigay sa inyo 'to, hindi niyo alam kung paano kino-compute. Actually, all in all, there are 18 formulas with ilan nga lang yung inilabas mo na
Yes, Doc.
ratio.
Yung common lang talaga, Doc.
Actually, 18 lahat yan. 18 formulas yan with the 6 category ng ratio.
Mm-mm.
Aside from, nakita mo yung kanina, meron pang computation tayo before going to ganyan, may average ganyan,
Yes,
ganyan.
yes,
ganyan.
Doc.
So, the point now is what? You can use that financial ratio if ever. Hindi lahat. If you want to, na talagang gusto mo masiguro na maganda yung negosyo mo, why not? Pero, if let's say you are to know kung pwede pa ba ako mangutang, go with the debt ratio. If
Yes,
you want to
whichever
know
is applicable po, Doc.
yes, which is applicable. Kasi look, kung lahat ang kukumputin mo, tapos nagawa ka pa ng, let's say, horizontal, vertical analysis, ano ba gusto mo malaman? Gusto mo ba talaga kung kumikita yung negosyo mo?
That's why you need to understand the purpose of the ratio kasi with that purpose of ratio, you can identify, ito yung i-compute ko kung ganito yung gusto kong malaman.
Actually, malit ang kita mo ngayon. Bakit kaya mali ito? Di yun, gamitin mo yung profitability.
Yes,
Yun ang point niya, no? Hindi dun sa point na ano, ha? Kaya nga, the limitations of, kanina nung sinabi ni Sir, no? Sir
Yes.
Oliver, may limitations din naman yan. One, baka mamaya mali yung kinukuha mo number as what we did, di ba? Nagkamali tayo kanina doon sa computation, iba yung nakuha natin. Second, another limitation is when no you opted to come up with gusto kong malaman talaga kung ano nangyayari. Okay, why not? But the point is, hindi kaya sayang ang oras para gawin mo lahat yan.
Yes,
In the first place, we're looking at industry ratio Kanya kumukha ginawa mo kanina.
Yes po, Doc.
Pagka may basis ka, merong sabi level, no? Industry ratio. At hindi
Benchmark po, Doc.
Benchmark, yes. Hindi naman ganun kalaki, okay lang. Pero kung let's say talagang it's too much, ang laki ng diferensya, ay talaga mag-isip ka nga. No? In the first place, doon sa mga kinukompute naman natin, literally, kahit hindi mo nakunin yung percentage, makita mo lang yung amount, parang alam mo na kung ano meron.
Mas
Okay.
mahirap na to sa undergrad, Doc, kasi calculator tayo. Ito, meron na tayong Excel pero sa undergrad calculator lang
ako, Jester, pinapayagan ko na, nag-ano ng computer.
Excel na din.
Oo,
Pero
pinapayagan
Doc,
ko.
calculator
Kasi
talaga.
my point there is what? Yung yung scientific calculator, pinapayagan ko. May idea is, kaya nga na-introduce yung mga yan para mapadali ang buhay. In the first place, kita mo na nga, meron ka ng technique, di ba? Nalilito ko pa rin when it comes to inputting the numbers.
Yes po, Doc.
Hindi pa? Hindi ka pa ba maaawa sa bata?
I
Sorry,
agree, Doc.
ako yun ang tinitingnan ko Ano ba gusto natin malaman dito? The idea of how to do it. That's it. Pero para pahirapan mo pa, hindi. Meron daw proof Sige, computerin niya, manual. Talaga lang? Hindi daw, para daw pag walang calculator, okay, makaka-compute. Hindi ko naman kukompute niya kung wala akong calculator. Ano ko, nagpapakamatay?
Tsaka sorry, talaga, actual computation ko talaga, hindi yung pre-computed na siya. Actual computation para masundan po natin yung paano ba talaga siya i-compute.
At talaga nakakalito.
sorry
I tell you, nakakalito talaga yan. Picking up numbers. Let's say, kung ano, is it, let's say, you ought to pick up total assets. Sa nakuha mo, total liabilities. Dahil halos magkakatabi sila, di ba? Kaya talagang presence of mind. Now, actually, may mga tanong dito, no? Sabi dito ni Amy, Miss Valiente, Sir Jester, at what other instance po, other than acquisition, can an asset, particularly land, leverage on value para ma-reflect sa analysis? Pwede po ba natin i-apply yung value ng land since it appreciates? Actually, madam, we focus on the numbers in the income state ay in the
Financial statement
financial
po.
statement. Hindi po pwede yung assumption lang.
Yes po.
All these things na kino-compute natin, may basis tayo financial statement.
Na-mention po ni Doc Oliver po yung limitation na yan kasi yung financial statement analysis purely based on what is recorded. So if it
Yes.
is just a future transaction, it is not yet recorded, it cannot be included in the financial statement analysis po.
Unless ang ginagawa mo is a pro forma.
Yes,
Diba,
yung
minsan,
pro forma
we
makikita
want
mo
to
na
know
yung
kung
income.
under budgeting, okay, planning or budgeting. Under that, minsan we want to know, prepare ba ito na pwede mabili? So, okay lang yon. Pero you're using not the financial statement itself
Mhm.
na present, but you will be doing it on a pro forma para may assumption.
Siguro yung question niya related din kung related siya sa capital budgeting. It will be discussed kasi doon sa capital budgeting, doon mo malalaman if the capital outlay is profitable on the long run or not. So malalaman kung kailangan mo ay ano ba talagang
Kasi
is
meron
this
doon point
favorable
na,
to buy, parang ganun.
yeah, meron kasi doon na gesture na with regards to assumption. Mag-a-assume ka. Kung nag-appreciate yun na, magkano siya ngayon? Di pupunta ka sa assessor, magkano ba ngayon ang lupa? So may mga assumption na gagawin. Pero that's the other way of it, no?
Yes,
Itong pinag-uusapan natin, yung ano talaga meron sa financial.
yes, kung ano na yung
Talking of
kumbaga
the-
meron na pong financial statement, then i-analyze po natin kung ano yung ibig sabihin ng mga figures na nandyan sa financial statement po.
Oo, yun ha. Kaya minsan, don't be misled. Kaya nga sabi ko nga, you also have to be on focus on looking what kind of financial statement you are handling or you are holding. Dahil baka mamaya, hindi yan yung actual na financial statement. Baka yan ay pro forma. Tayo niyan. Kaya dapat talaga, no, tingin sa title. Kamukha, ano title? Let's say, balance sheet for the period, yan. Pero pag nakakita ka, it's a pro forma balance sheet. Iba mentality. No? Iba yung magiging outcome ng evaluation mo kasi pro forma siya. Okay po. So, any question pa? May question pa dito. Hindi naman question. It's about vertical item, horizontal time. Ganun ba? Di yata po. Parang it's almost the same. Ang medyo tinitingnan lang dito is what is the best in terms of analysis? Anong gusto mong gamitin? Now, if it is about for let's say ilang financial statement, you go with horizontal. Pero kung let's say isa, dalawa lang yan, mag-vertical ka na lang.
Yes po, I would agree, Doc, na wala pong best na financial analysis tools na pwede mong
Depende na
gamitin
lang
that
nga
fits all.
Let's say you want to know, let's say the trending is bumababa yung yung capitalization mo, no, o yung yung pera ng negosyo mo. So you go with let's say ilang financial statement. O pinakamagaling na magawa mo daw to evaluate horizontal.
Yes po, para makuha mo yung trend ng galaw ng
Yes,
cash
yung
mo.
trending.
For 5
Pero kung
years,
let's
10
say
years.
isa lang naman, ba ngayon, yung nakaraang taon, kumikita ko ba't parang nakaraang mga taon, kumikita ko bakit ngayon parang hindi? O titignan mo yung nangyari, baka yung taon na to, baka may umapekto. So, isa lang pwede siya horizontal. Vertical. Kahit isa lang. The usual kasi, pagka isa o dalawa, pwedeng gamitin mo vertical eh. Pero kung 5 taon yung titignan mo, teka muna, okay ka lang. So, gamitin mo horizontal. May ganung mga it's on you kung ano yung sa tingin mo mapapadali sa iyo at makukuha mo naman yung gusto mong result. Yun na nga, kung ayaw mo niyan, punta ka doon sa ratio. Yun, lalo mas dugo. Okay pa. So, meron pa ba tayo? Yun, wala na naman so far. Okay, so I congratulate all the reporters for a well done job, no? Well done job. 'Yon, no? At sige, kain na tayo. Actually, may katabi ako dito mani. Nagugutom na ako.
Sorry po talaga, medyo mahaba yung
lang, anak.
discussion.
Walang problema sa akin yan. Ako, pag ganyan, I bear with the computation. Kasi kita mo nga kanina, Hindi ko masyadong makita yun, kaya nakasubsob ako dito. Pinagmamasdan ko yung pinagkukunan mo. Ang bilis nung damay nung kamay mo, kaya sabi ko, wait. Dahil iba yung tingin ko. Ayun pala, gutom na ako. Kaya kumuha ko mani. Yun, no? Sorry po. Okay, so next meeting, we will deal naman with that module 3, no? Ay, module 4 and 5. Okay? 4 and 5 po. So, sorry po medyo na-delay tayo. Maganda naman yung discussion natin. Okay? So,
Thank you po,
may
Doc.
question po ba kayo? Okay na?
Wala naman po na, Doc.
Okay, sige po. So, medyo pahinga na po tayo and thank you for this day, no po, na tayo nagkita-kita. Maraming salamat po.
Thank you po, Doc.
Thank you po.
Bye po. Bye po.
Good night po.
Thank you, Doc.
Good night po, Doc. Good night, classmates sa lahat. Bye-bye.
Opo, thank you po
Bye.
sa reporters. Thank you. You have been very well informed. Na-informed kami masyado. Thank you.
Thank you,
Bye
Doc.
po. Have a good night po. Bye-bye.
Good night po. Ay, naka-report pa pala ako. Wait. Stop. Yun.